cooperation did take place, and over a period of time, over the period of this investigation? What does that tell you?
So it says that definitely when a settlement takes place, there is a discussion a bit on the merits also. If the US authorities are now settling this big issue, it is obvious they find that for the matter to go for trial, for the matter to get a conclusion, it takes a lot of time, and they may not have a great case. Insofar as Adani is concerned, for them to settle also makes sense, that instead of fighting this matter for a successful resolution, it takes a lot of time. So to boost investor confidence, boost relationship with the country, boost investment in the US, it was a good deal. And it is not that it happens only in the US. Even in the Indian law, if a settlement takes place, it takes place without any admission of guilt. That is provided in our age-old law, that when you settle a matter, there is no admission of guilt at all. So a settlement is a win-win for both sides. It boosts confidence, and I think it's a great thing for both groups.
You know, I just want to get in corporate view as well from a veteran banker. And like I said, again, he's speaking here in his personal capacity. But KK Mistry, thank you for your time to us. What do you make of this end of legal overhang for the Adani Group and the events that have followed? What are your comments?
All right, so let me first of all say that I'm extremely glad, genuinely very, very glad that this entire SEC matter has been settled and put to rest. I have great admiration for the Adani Group and what they've done over the years in terms of building up India's infrastructure. If you look at it, if you look at the last 10 years, the Adani Group has really, in my view, been the single biggest contributor to India's infrastructure growth. The settlement of this SEC matter will hopefully enable the group and Gautam Bhai in particular to focus on even faster growth and thereby contribute even more meaningfully to India's economy. So in that sense, I'm extremely happy. If I was to just quickly enumerate some of the things that I know about the group, I think they've done a phenomenal amount of work for India. The group's contribution to India's infrastructure has been genuinely phenomenal. And I'll give you just a few examples. If you see 28%, and this is from memory, so I might be slightly wrong, 28% of India's total port cargo is contributed by the group. The Mundra port is India's #1 automobile export zone, and it accounts for, and it exports to nearly 100 countries from what I know. The Adani Group contributes, and this is a really remarkable thing, they contribute to 14% of the Nifty 50's capital expenditure. They account for nearly 9% of India's infrastructure GDP. From energy to transport to ports to digital networks to cement to various sectors. And they pay nearly, I was surprised, they pay nearly 75,000 crore rupees as either taxes or dues to the government. So their contribution to India in every respect has been phenomenal, absolutely phenomenal. If you look at renewable energy, look at the number of jobs that they have created. I read somewhere that if you include partners and if you include the contractors, they have created nearly 4 lakh jobs in the country. So their contribution has been absolutely phenomenal. And therefore, in that sense, I'm genuinely happy that this SEC matter is being resolved amicably and is being settled once and for all.
Absolutely. Now, some of that growth that you were referring to, Keki, has taken place despite the legal overhangs. But if I look forward from a cost of funds standpoint, how significant would be the removal of this overhang? Because for a group that has borrowed quite comfortably from overseas in the past, how would this affect the acceptability of the Adani Group's paper, both equity and debt?
Absolutely correct. I think in India, they have the highest standing in terms of credit. In the international market, this SEC matter could be playing on the minds of certain lenders, certain banks globally. And with this matter being put to rest, I think their borrowing costs would also improve, and there'll be more banks which would want to come forward and lend money to the group. So if they were able to raise funding from overseas at an even lower rate, then that will contribute in an even more meaningful manner to India's growth story.
Well put, Keki. What role do you see the group playing over the next 3 to 5 years, particularly in the current context with the West Asia conflict, ongoing energy supply chains affected, at a time when self-reliance is of more importance and an infra giant is now becoming unfettered?
See, they have been expanding at a very, very rapid pace, extremely rapid pace, and they've moved into the group has moved into almost every segment of anything to do with infrastructure. They have something like, if I recall right, something like a 6 lakh crore, which is about what, $70 billion investment plan for aviation, for green energy, for digital infrastructure. And in terms of what they've done for renewable energy is phenomenal. And in this time and age where energy is becoming such a big issue globally, renewable energy can be a very big savior if we can really scale that up to to contribute in a bigger way to India's growth. Energy costs may not come down that soon. Even if we assume that the war comes to an end right away, I hear from experts, and I'm not an expert, but I hear from experts that it would take something like 4 to 6 months for all these supply chains to get restored and normalcy to come back. So I don't think we will be seeing oil back at $60, $65, $70 for quite some time. And therefore, till that time, if we can really pep up renewable energy, it would go a long way in helping the economy.
Right, and that's well put. I'm just wondering, Keki, particularly if you think about the OFAC case where there is alleged sanctions infringement, the group maintained that it was not aware that it was buying Iranian LPG. And the effort has been, since that case came up, to shore up compliance further to ensure that this doesn't happen again. The question I have is, can this entire episode also be viewed from a positive light, with the group taking relevant steps to improve compliance, and that is a positive move going forward as well?
I think it's probably a little unfortunate that what happened, but the group was not aware that it was Iranian products that they were selling, and I think there'll be a greater. I mean, we see this even in other businesses. If you see the e-commerce business, very often, not very often, but very sometimes, you could see a supplier supplying goods from a country which has been banned or a country which has been sanctioned. Now, the moment the e-commerce player would come to know that something like this is happening, they would immediately remove that supplier from the chain. But it takes a little while to be aware of these things. So whilst you do all the diligence you want, sometimes these things can skip through.
Yeah, it's just that the fallout for the group has been massive in terms of the attempt made to take all of these cases and build it into a case for reputational damage. That, in a sense, ends now. Thank you so much, Keki, for those comments, but I do request you to stay on with us for the show as we speak to other people as well. I want to get your view in, Sudeep Bandapadia, from a market lens. How are you looking at it? I mean, the stocks move as they do as the news flow comes in. But, we were speaking to Samir Aroda earlier today, and I want to play out what he said as well. And he talked about how any questions, if they were in that domain for large mutual funds or FIIs, etc., to come in and buy into the group stocks, now those questions evaporate.
Oh, absolutely right. I think there's a significant reputational, fog which was around gets cleared. I'm not at all saying that there were some issues which were genuine or anything like that. But when these kind of allegations are thrown at a group, obviously the reputation does take a beating. And there are many global investors, global banks, global institutions who normally, when these kind of allegations are there against a particular group, they tend to avoid either investing or working with that group. Now that well, Adani can continue to progress without those companies. But now that this reputational reputational issue has been cleared, I think they will be in a much, much better position to work with the whole world. And the whole world will be free to invest in Adani Group companies as well. That entire issue is now behind them. They have got few fantastic companies which they have built over the years, and they are completely aligned with India growth story, India infrastructure build, and they are very critical to the economy of India. So I think it is a good news for Indian economy and Indian capital markets as well that this matter is being put to rest and their name has been cleared.
Just stay on with us, Sudeep. Just want to play out the point that alpha investor and founder of Helios Capital, Samir Arora, made when we asked him about this question.
At least for the Adani Group, where we always had Adani Port in our portfolio, even from those days when this whole thing started with whatever that guy's name was, Hindenburg, whatever it was, Hindenburg. So since then, because I met many FIIs and a few mutual fund guys, and it looked to me that these stocks were put into the no list kind of thing. And although many of these guys knew that at least Adani Port is a very good asset and Ambuja is very easy to understand that it's a good asset, although I don't own it, I'm just saying in those days, they would say, no, we can't buy because this guy will ask, our board will ask, blah, blah, blah. Now you have got the clearances officially, but more than that, you've got the umbrella of the biggest mutual fund in India and one of the biggest FIs in India, buying it in such quantity that it is public immediately. I think that will give room to the other guys who wanted to buy in their firms, that they can go and ask whoever had stopped them or this thing. So I think now it will be considered as a normal stock. And if you consider it as a normal stock, everybody will own one or two of these stocks.
Okay, so that's a word coming from Samir Arora. Swapnil, I want to come to you on the importance of the timeline here, right? So we've had these cases that have gone on for a while. In certain cases, you're talking about 2023, 2024, all the way to 2026 now. With these out of the way, can you say for certain that this is now a full stop, that you don't have to worry about it as a shareholder of Adani Group?
Well, yes, as far as these three cases are concerned, I wouldn't have to worry about it because a settlement means a settlement. It's closed absolutely out of the way completely for Adani and for the people who have faith in the Adani Group. So I wouldn't worry about it, and I wouldn't smell a scorpion under every flower pot. So, I don't say that, this is not going to happen in the future, but at the same time, I would be very optimistic about the fact that I have to go about my business. I have to go about investing as a small-time investor or as a big investor. I have to let Adani do its job, and Adani should continue to do its job, which I'm sure it will. And, these minor hiccups which come along the way, especially when you're trying to go very hugely global. And, this is something which you have to take it in your stride. And, there will be cases against you and you'll be having cases against some people. So legal, interaction with lawyers and with the several courts of the world and of the country will continue in your space. And you will continue to grow that way.
Swapnil, if you just look at the nature of the allegations, I mean, the OFAC one, for example, you bought crude which was Iranian crude, but why didn't you know in advance? Why didn't you realize what you should have? Though they go on to explain mitigating factors that, yes, you cooperated with us fully. The moment you found out, you fixed everything that happened. Yes, the people that you bought it from misrepresented where the source of the crude is, but why didn't you figure it out? So if you look at the extent or the I would say, fabric of the different sets of allegations, there seemed to have been an attempt to overreach and build a narrative, don't you think?
Yes, Tamana, you hit the nail on the head. And, even if I do something little, that's blown out of proportion by the United States, especially when it comes to sanctions or interacting with people whom they don't like. So here I'm interacting with Iran. I've done it through possibly a Dubai supplier. And I've not done my due diligence, or assuming that I've done my due diligence, I've really not bothered about farthing about it because I'm not a United States citizen. I don't owe any allegiance to it. And I believe that, okay, as and when this case were to come up, as and when it comes, we'll take a call at it. But right now, for the moment, I need crude oil. I'm going to do it. I'm going to pay this much amount. And my country needs it and I'm going to have it. So, Tamanna, and you use the correct word, it's overreach. So I believe that when you're dealing with sanctions, or when you're dealing with SEC or the Department of Justice, dealing with very, very tight four corners of the law. And somewhere, even if you found to be slightly astray or amiss, albeit not intentional, they will be trying to wrap you up in the net. And, let me tell you one thing, more often than not, these tight laws by the United States are considered to be those speed restrictions that you find on European highways, where you can really go at 100 miles an hour and you have been restricted to 80. So deliberately, so that if you go to 90 or 91, there'll be a ticket to your house for X amount of euros. So, this is something which, a lot of people internally within the United States have complained about it, that these laws are way too strict, way too tight, and the interpretation of it is way too strict, so as to literally suffocate and asphyxiate people who want to do business, not only within the United States, but people from outside the US who want to do business. So that is where I think there'll be a lot of corrective mechanisms going forward by the United States to ensure that it still remains the most business-friendly country, so-called business-friendly country in the world, where literally the Adanis and the Ambanis and all the other conglomerates literally have no problems in lifting money from their banks, because that is what they want. They want their banks to lend out money to us. And if these are the kinds of situations that are going to accost me as an Adani group, I'm going to be thinking twice that, okay, be that as it may, I'll have to deal with the United States, but let me engage US lawyers in the first place to ensure that I'm not, I'm towing the dotted line. It's as simple as that. But it is overreach. Absolutely an overreach.
It's an important point.
Allegations, in fabricating a case, I would not say fabricating, but framing a case.
Sure, in the framing of the case. All right, Sudeep, my question to you is specifically on the borrowing program of the group. And ever since the Hindenburg attack and the allegations therein, the group has taken it on itself to become leaner when it comes to debt and to become more efficient. So your gearing ratios across companies for infrastructure creating companies is actually pretty lean. And they've got a significant roadmap for CAPEX heading into 2030. They've said in the past that they are not dependent on external funding. But how do you think that this removal of a legal hurdle will change the landscape for them? Will it accelerate certain projects that they have?
Well, Alex, I'd like to mention a couple of things. One is, if you look at it in hindsight, as far as fundraising is concerned and overall financial management is concerned, this, in a very, very weird way, has been a thing in disguise. Look, the group has tightened its finances. They have cut a lot of flap, which were non-core. Their working capital management has improved significantly over the last 4 or 5 years since the first Hindenburg allegations surfaced. They were not able to access funds from abroad. Now, while we are talking about it, look at it, what had happened to people who had accessed funds from abroad. Either they would have hedged at a very high cost, or if they had kept a part of it unhedged, the currency depreciation in India would have really, really badly impacted them. So, Adani by default, I think, have been saved from that kind of a cost or that kind of a consequence. So I don't think, this 4 or 5 years of pain which they went through by not being able to access the world hasn't been too bad for the group. They are now much more trim and more fit. And now when things are falling in place, and God willing, once the West Asia war ends and things become normal, they will be in a much, much better position from their own balance sheet point of view also to access the global markets and really access funds at a significantly better term compared to what they were able to do earlier.
Sudeep, just a follow up to that then, because in a sense, you're talking about Adani Enterprises that has been the incubator for the group, and certain plans that might have been afoot with regard to separating certain businesses, maybe the airports business, maybe otherwise, may have, I don't know for certain, but it may have been put on hold while all of these legal challenges have been in place. Does this also open up the roadmap for certain corporate actions to be taken by the group?
Oh, absolutely. And you have hit the nail on the head, Alex. I think airport business needs to be separated out. It needs to have its own path, just like many other group companies. And for that airport business to become separate and find its own destiny, access to foreign capital, international funds is very, very critical. And I'm pretty confident that that definitely will be the first thing in the pipeline, once things have settled down.
Mahesh, just to sum up, implications, of course, for the group, but also for India Inc. and especially large companies that are dealing with several conglomerates, Indian conglomerates dealing with several kinds of businesses in various territories. What are the legal lessons over here and the precedents that are set?
See, this gives a lot of confidence to India Inc. and Indian businesses. Like Adani, there are many companies in India who are engaged in millions of dollars of imports and exports. What happened? I'm surprised that your channel is still saying Iranian LPG. The allegation here was LPG was imported by Adani. It is required by the country. It's in a usual course of business. So some allegations were made that it originated in Iran. These allegations were denied. Anyways, now processes have been put to put proper due diligence. This matter went, some allegations have been made and the matter is settled. It gives a lot of confidence to Indian business that if you do business correctly, even if there's an allegation made, it can be resolved. This gives confidence for cross-border investment, Indian investment in US and US investment in India. These kind of settlements and closure of matters give big boost to investor confidence. There are large companies, as I said, who are investing in US. If these kind of cases continue, it obviously creates a cloud or a doubt in the mind of Indian businessmen that they might face these kind of allegations there. But this kind of a settlement is a big boost, and a settlement like this is giving a lot of investor confidence.
I think that's a great point, Mahesh. Thank you so much to all of you for joining in and just helping to break down what this means from several perspectives for a corporate entity of this size in the Indian context, globally as well as all of the business go through, and for the Adani Group and the impact that it has had. With that, that's all the time we have on this special show. Thank you so much for watching, but all the action continues on NDTV Profit. Stay with us.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew, and with me is Hiral Dadia, and we'll take you through the next 1 hour of trade. It's been an exciting day so far, and we may have given up a little bit of gains on the Nifty 50, but the breadth, Hiral, looks particularly good, and we're hovering around that 23,400 mark. The story of the day has to be IT.
It has to be IT. It's the second consecutive session of gains that are coming in from IT majors. Now, the question is, are they looking at something positive from NVIDIA earnings that are slated tonight? Is that one of the cues that we are looking at ahead of? That's something that we will tell you tomorrow on India Market Open as well. But Bank Nifty, again, a similar trend. Pretty flat, but what was interesting today, Alex, was the setup in terms of Bank Nifty, as Kush was also indicating, was looking much better and stronger from a weekly perspective as compared to Nifty 50. So that's one of the key takeaways of the day, viewers, that you should be taking through. Let's just quickly first look at the heat map in terms of Nifty 50 and see what's happened. The heavyweights are the ones which have given up the gains. You are seeing the IT pack, which is on the top of the list. You have Tata Motors PB also, which is doing pretty well. Eternal, 3% up move. It wasn't seeing these kind of gains when we started off the trading session today, but it's climbed up the radar along with the Adani Enterprises, SBI, HDFC Life. Kotak, interestingly, has been under pressure. Cement majors like Ultratech are down in trade. Your pharma also, to some extent, is bleeding in today's session, from a Dr. Reddy's, Cipla to a Sun Pharma. So no particular trend that's emerging. But Alex, I think the sectoral heat map and the contributors will be interesting.
Yeah, certainly, absolutely. In fact, the sectoral heat map will tell you that there's a significant amount of green on the screen, of course, but IT ruling the roost. What stands out to me, and we'll talk about it in the intraday charts for both the mid-cap and the small-cap index in just a bit, is that the broader market is where the strength is at right now. Apart from that, you have realty that's doing okay, you have the PSU banking pack that is doing okay. So what's not doing well, as we've already seen, is the private sector bank. It's the one entity that is in the red right now, and financial services as a whole, therefore, because the weightage of private sector banks having a bearing there. Consumer durables was actually a tad bit weak, if I remember correctly, in trade yesterday. It's up and about today, and pharma is doing okay. But pull up the intraday charts, both for the mid-cap and for the small-cap index, and you will likely see...
Just one thing I want to add over here, Alex, is in spite of seeing a sea of green, except the private banking space, you're still seeing the breadth which is in favor of the broader markets.
Yeah.
You're not seeing that kind of impact coming in terms of individual counters as well.
Yeah.
You know, there are individual pockets which are bleeding, but it's not having an impact on the sectoral indices.
No big losers there.
Yeah.
We'll pull up the big movers from the broader markets as well. So this is the mid-cap index at very close to the high point of the day and held pretty much throughout this trading session. A similar screen is what you'll see for the small cap index as well. So as a result of which, the advanced decline ratio, when you pull up that intraday chart for that, is going to stay more or less at that widest point through the session. Just to make the point that Hiral was making on the big movers from the broader market. So if you can pull up the 500 and you look at the big movers, there are a few smattering of stocks that are losing over 3%. But like Hiral was saying, not many. So just less than 6 or 7 that are losing more than 3%. Everything else is less than that. A few stocks doing well: Spark, Mastech, Weber Global, Angel One. Interesting, no real trigger, but the capital market players are doing particularly well.
Absolutely.
Today.
And JK Paper, the other ones are reacting
related
to earnings, right? But let's quickly understand the setup. Your Nifty has been actually gaining for a second consecutive session, though it's been a pretty range-bound trade that you're seeing in terms of markets. That 23,800 mark is becoming an absolute struggle for Nifty 50. And once it crosses that, then probably you will see sustainable green shoots that could emerge as well. In fact, experts are expecting that range to remain pretty tight, and 23,250 to 23,800 is what you're looking at. In terms of upside triggers, if Nifty sustains above the 23,800 mark, then it opens up the doors for levels of 24,000 to 24,100 as you're seeing. And in terms of support on the lower side, that is coming in strong at 23,600. And below that, if we break that 23,600 mark, you're actually eyeing a 23,400. As Alex was mentioning, the showstopper is absolutely Nifty IT, where you are seeing good amount of buying interest that's coming in there. And in consonance to that, you have real estate, which is actually gaining strength as well. A second straight session where value buying has been emerging in terms of real estate companies and in the small and mid cap counters. So that's where the strength is once again. Bank Nifty, you know, according to what numbers are indicating, the setup is weak, at least for today. But from leading gains yesterday to being the only sector in the red is the key question as to why. The weakness is bank is mainly been led by private banks, as we told you, but the resistance is crucial. 53,700 is the first resistance levels, and then you can see the next ones that follow. And the first support level is coming in at 52,990 on Bank Nifty as well. So that's what the markets are looking like right now. It is interesting to see what we could do from here on, but let's get in. Dilip Bhatt, founder at Pedigree Advisory, and Gaurav Sharma, Associate VP at HR Globe Capital, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. Let me come to you, Gaurav, first in terms of charts. You know, initially the question was, is Bank Nifty looking stronger as compared to Nifty 50 from a weekly perspective? That's what we started our day with. But right now, if you go to see, it's the private banks which are continuing to bleed. And you have Nifty, which is showing you some bit of strength, but mainly it's the small and mid-cap counters which are gaining strength and sustainability. What are the levels that you are watching out for?
Hi, a very good afternoon to all the viewers of NDTV Profit. So, talking about Bank Nifty, it is trading absolutely sideways all throughout the day. The range is too very narrow for what Bank Nifty is known for. It is completely trading against its normal momentum. PSU banks are somewhat performing, but private bankings are taking everything off they are gaining. So that is the reason the banking pack is a little mixed. As far as the overall charts are concerned, it is a clearly indecisive. Middle of the range is where Bank Nifty is trading currently. 54,500, 54,600 being the breakout level, 52,800 being the breakdown. It is just trading in the middle of that. As far as Nifty index is concerned, it is trading near closer to 23,800 mark, which is a breakout point. Once that is taken out, Nifty will quickly head towards 24,000 and 24,200 levels, where exactly we are eyeing at.
Individual stocks that you're liking, Gaurav, and Dilip, then we'll come to you on a couple of stocks from the same space that are buzzing. And good afternoon to both of you. Gaurav, individual stocks that you're looking at positively today?
Yeah, hi. Very good afternoon, Alex. I'll go with the IT pack. The especially those IT companies that drive larger chunk of their revenue from the BFSI space, namely Coforge, OFSS. They are at the top of the tally. We like them so very much. OFSS is already on the move, and Coforge is actually available at a very corrected rate. So from a medium-term perspective, Coforge becomes a very good proposition. From a long-term perspective, we'll go with the OFSS. As far as trading and short-term moves are concerned, things like JSW Energy is catching our eyes. After a 2 to 3 days of consolidation, it is all set for a breakout towards 560 odd levels. So that is one stock that can be kept on radar.
IT counters, JSW Energy, few of the names that you should be watching out for. But before we take any questions with our guests, Zydus Life is one that we want to address. The numbers have just come in a couple of, probably few minutes ago. The stock is at the day's highest levels. And it seems there is a recovery which is coming in terms of the US market segment. Varsha is standing by to tell us more in terms of what are the key highlights in terms of the earnings that she's been picking up. And Varsha, anything else in terms of buyback announcements that are keeping buyers enthused?
Yes, absolutely. So one is, of course, the US recovery and the buyback announcement. On to the US recovery, everyone was expecting that US will have a weak growth, because of the no rev limit contribution. But there was a beat when it comes to North America business. Also the base business, if you see in North America, there was a volume expansion and new launches which drove the growth, and hence the beat coming in. There was a strong traction also in rare disease portfolio as well. Now talking about the international markets, which were actually strong, growth was accelerated across emerging markets in Europe, which was though expected. A broad-based demand across geographies. Now talking about the consumer wellness surge, well, the international wellness business grew strongly, I would say, and the domestic brands maintained leadership. Also, that there was a high growth in key segments like skin and nutrition. Onto the India formulation business, if I were to talk about, was up almost 14%, and there was a product mix improvement as well. So higher contribution was from specialty plus chronic and rare disease, which actually had a better realization, which supported margin. So overall, a strong set of numbers. Talking about the buyback also, they were approved buyback. Also, when it comes to Zydus Life Sciences, there was a buyback of almost 1100 crore at a price of 1150 rupees. So these are, basically a strong set of numbers, beat estimates, and the buyback announcement are the key reason why you're seeing, the buzz going on when it comes to Zydus Life Sciences.
Absolutely. In fact, pull up the intraday chart. Varsha, thanks so much for that. Pull up the intraday chart for Zydus Life and you see the kind of spike that has come through. And by the way, that's of course one of the buzzing stocks today, but important to point out to you what you're seeing at the bottom of the screen, which is that the rupee has in fact hit a fresh record low, now 96.5 on the ticker. And this is practically a daily occurrence. In fact, this intraday chart is something that is familiar. If you look at the past several trading sessions, there's usually a spike at approximately this time towards the end of the session. Dilip, I want to come to you on both of these aspects. Actually, we spoke about Zydus Life, but I also want to ask you about the implications of the currency falling to a fresh low practically every other day. On the one hand, it is positive for exporters, but on the other hand, the balance of payments becomes that much more perilous. And in a sense, it is negative for several important companies.
Sure. Good afternoon. I think certainly the falling rupee is a very kind of a vexatious problem for us, and is going to lead to a lot of vicious cycle that we might get into. And this is a falling rupee will not hurt you so much when the inflation is very benign. But certainly when the inflation is inching up on all the fronts, so I think a falling rupee will hurt you much more because you are a net importer and oil being what it is. So I think it also, we have seen the kind of FII outflows that have taken place. Having said that, I think we are possibly at the peak negative sentiments as far as the rupee is concerned and as far as the FII outflows are concerned. So perhaps they might have peaked out in terms of the pessimism, and somewhere maybe next couple of months, possibly we'll see stabilization on both the fronts. But I would say that from here on, the rupee should behave much more in a much more stabilized way, is what my broad call would be. And similarly, even for FIs, I think the outflows hopefully will stop because they have really capitalized quite a bit on the falling rupee. And my sense is that some of the measures that will be taken to arrest this kind of situation would help to improve the overall sentiments in terms of the pessimism.
Absolutely, an interesting point there. In fact, the way the rupee, Alex, has been panning out somewhere will be positive for a lot of pharma companies as well, as it is with IT companies. And in fact, that's going to be something that we should be watching out for in terms of the first quarter of FY27 earnings. But Varsha continues to be with us to tell us what's happened to our Sun Pharma Advanced Research, because a landmark financial turnaround is what they've reported this year in terms of FY26, where the company's actually swung from a deep loss to a substantial profit. It has cooled off from the day's highest levels, but still trading with double-digit gains. Varsha, what are you picking up so far in terms of where, Spark goes? I mean, we are calling it the stock of the day, but what are the reasons?
So, one of the reasons why you're seeing a sharp uptick in financial is because the PRV sale. Now, we'll understand what that is. But the overall financials, if you see, the boost is largely one-off, that is PRV sales, and which is not driven by, core pharma R&D revenue growth, which Spark is into. While sustainability of such profits may be limited or remains limited going forward. Talking about the four numbers, if I were to talk about, there was a huge growth in revenue, EBITDA and net profit as well, while there was a loss last year though. Now, let's talk about the performance drivers. One is the massive turnaround, of course, from losses to strong profit. 1,840 crore income was generated from priority review voucher, PRV only. And this is received from US FDA for SESB product that the company has. And this voucher was later, sold for rupees $195 million, which is a high monetization for us, for a company like Spark. And this is a one-off income, which is a core reason, for sharp spike in revenue and profit. Now, what is PRV? Now, this is very common when it comes to companies like Spark. So, it's a special voucher or approval benefit given by US FDA, and the company gets PRV when it develops important drugs like rare disease or pediatric drugs. And with PRV, one can get fast track approval for the different kind of drugs. Normal approval, if I were to talk about, takes 10 months, but PRV cut it to almost 6 months. So the monetization itself has led to the Spark, the sharp rise in financials. The core business performance, if I were to talk about, base revenue from operation was only 13.2 crore, indicates core R&D business remains limited, but there was no tax expense during the quarter, and which helped translate the entire, operating gain into net profit. So overall, PRV sales is only one of the reason why you're seeing a sharp uptick in Spark's financial numbers.
Okay, thank you so much for that. Before we just get into a conversation with Naveen Mathur, who will be joining us as well on the Indian rupee, a quick word, Dilip bhai, when it comes to the pharmaceutical space, because they do become, beneficiaries with the way rupee depreciates. How are you looking at the sector right now?
Well, I think you have certainly said it correctly. Absolutely, I think the rupee depreciation helps pharma as well as IT in a very big way, because the bulk of their exports and bulk of their profits do come from that. So in that sense, I think the pharmas continue to have a strong tailwind in that sense. But even otherwise, I think most of the frontline companies are very well geared to give a very decent volume growth of around 10 to 15%. I think mostly contributing by the exports. And I think rupee being where it is, I think it's going to help almost all the pharma companies. The threat of a US FDA inspection, which largely prevailed in the earlier times, I think has been much diluted, because most of these frontline companies have quite a few plants all over the place. So observation on one or two plants does not impact them. So in that sense, I would say that something like Sun Pharma, Divi's Laboratory, Lupin, Zydus certainly would look very strong. Maybe over the next 12 to 8 months to put it in your portfolio.
So that's a comprehensive view on the pharmaceutical space. Now, back to the Indian rupee. It has now slipped to an all-time low of 96.54 against the US dollar. Naveen Mathur, Director Commodities and Currencies and Gift City IFSC at Anand Rathi Share and Stockbrokers, joining us on the phone line to explain this. Naveen, practically every day we're looking at a scenario where in the second half, towards the end of trade, you're seeing a bit of a spike in the rupee. Why is that taking place? One, where's the pressure coming from? And where do you see this culminating? What are the levels that you're seeing?
Thank you very much, and good afternoon to all the viewers. Thank you for having me on the call. I think there are fundamental reasons, now most of us know about them, for the rupee depreciation. Means today again it is 96.54, touched a new low yesterday. We closed at around 96.35. Now, the fundamental reason still remains the same. The oil is at 107 levels plus all throughout for the last couple of weeks. And currently we are near around $110 a barrel for the Brent. And the other factors like the US-India yield gap, which is narrowing sharply, the higher bond yields. In spite of all that, the RBI is intervening. And the forex reserves have been at around $696 billion, which were at $728 billion before the start of the war. So RBI is using the forex reserves. Means we have seen a drawdown of around $34 billion to hold the rupee depreciation. But at the end of the day, the honest assessment is that up till and unless we don't see some kind of a breather to oil, to the current account deficit position, the rupee slide may continue and the FPI outflows would add on to the pressure.
Got it. All right. Thanks so much, Naveen, for taking the time for that quick view, because ultimately what else is there to say, as you've pointed out, till there is pressure on the rupee in the form of higher crude oil prices, that's going to remain the case. Pull up crude whenever we were able to, and you'll see that it's sustaining well above that $100 per barrel mark, which is why there is considerable pressure. $110 per barrel right now for Brent crude. And bear in mind that there is no headway at this moment that is being made with regard to the West Asia crisis and the Iran war. Now, let's head over to an earnings conversation. And Dhanuka Agritech has reported its fourth quarter earnings, registering a strong profit growth of 29% on a year-on-year basis, while revenue has seen an uptick of about 9%. The company has also approved a buyback of up to 5 lakh shares at 1,400 rupees per share. The stock price currently at 1,205, and that is why you're seeing that significant uptick in the stock. We're joined by Mr. M.K. Dhanuka, who is the chairman of Dhanuka Agritech. Mr. Dhanuka, thanks so much for taking the time. At the onset, let me ask you about what has gotten your shareholders most excited, which is the buyback and the pricing of the buyback. What was the thinking here, sir?
Actually, we reward the shareholders since the buyback is more beneficial for the shareholders, because they get the taxation benefit in comparison to the dividend. So that's why the management thought that we should go for the buyback instead of giving dividend to the shareholders. So that was the reason of doing the buyback for 5 lakh shares at the rate of rupees 1,400 rupees per share.
All right. So now let's turn back to the earnings, right? Because seemingly you've had a better cost absorption in the fourth quarter versus the third quarter, and as a result of which you're actually seeing pretty significant growth in both EBITDA as well as, or rather actually 5% growth in EBITDA and 29.8% growth in PAT. What are the factors that have led to this? Pricing increases?
Price increase happened mainly from April onwards, because March price list we finalized by 20th February itself, and basically the war started from 28th February onward. So although the prices started increasing from mid-March only, but we took the increase from 1st April onwards. So that is one reason. Second is basically we got around 24 crore rupees GST benefit from the Udhampur unit. This benefit was up to 31st March 26 only. So this was the last year to get the GST advantage. So we did higher production from Udhampur unit so that we can get maximum GST benefit.
Okay. Mr. Dhanuka, good afternoon. This is Hiral on this side. You know, my question to you is, if you have to look at FY27 as a year, your expectation in terms of what you could see is very strong, double-digit revenue growth, and this is despite a challenging backdrop that we are staring at. There is a warning of a incoming El Nino. Secondly, that could actually lower the southwest monsoon as well, if you have to talk about in terms of impact. So there are dry spells coming in. Now, in terms of the product mix pivot, herbicides make up majority of your revenues, around about 35 to 40%. And in this kind of a scenario, you will have to move from herbicides to insecticides. How are you looking to make that transition, number one? And two, have you baked in all of these concerns in terms before projecting what you're looking at in terms of FY27?
Yeah, you see the El Nino impact is going to come from in the later part of the Kharif season. So by that time, the herbicide season for Kharif will be over. So consumption of herbicide will happen by the time the El Nino will take place for the Kharif season. So that's why herbicide consumption will be already over. Secondly, the biostimulants, for which the government put ban last year, and around 60 crore sale was impacted because of the ban on biostimulants. That sale we will be getting this year because 3 of our products out of the 4 has been approved by the government, and from June first week onwards, we are going to market these molecules. So we hope that around 60 crore sales we will be getting from these biostimulants. And some sales from the 2 products we acquired from Bayer Germany, that will come in the books of Dhanuka. So overall, we expect that we will be able to get this double-digit growth. And secondly, 60% acreages are now irrigated in India. So we are not totally dependent on monsoon. 60% irrigation is available. Only 40% is dependent on monsoon.
Okay, so from the Bayer Alliance as well, if I'm not mistaken, 60 to 70 crores is what you were anticipating in terms of the contribution that could be coming in. My second point being now, the price hike that you mentioned about right now, the anticipation is that there is going to be some bit of a weakness, there will be some bit of an impact. Do you think that the market is ripe enough to actually absorb the kind of price hikes that you've already started taking from the month of April, number one? And two, in terms of the raw materials, are you seeing any pressure in terms of pricing because of supply chain constraints?
You see, the prices which we increased from 1st April, they were absorbed by the market. But the price increase which we have hiked from 1st of May, that has not been accepted by the market. And some of the prices we have to revert back. So that is one thing. And secondly, definitely because of this South Asia, West Asia war, the impact is there on the prices as well as the supply chain, because all the pesticides are dependent on crude derivatives, and because crude is crossed $110 from $70, so overall it has impacted the prices, and the availability of some certain molecules is also impacted.
Dhanuka, just to clarify what you've just said, what was the quantum of the hike that was attempted in May and across which products?
You see, we are manufacturing around more than 90 products.
Sure.
So we took the price hike on around 1/3 of the molecules, because the products which we are importing from Japan, there is no price hike. The prices are basically stagnant for the whole year. So we have not taken any price hike on Japanese products, only on generics, where the technical raw material prices have increased, we have taken price hike, and that was to the extent of 4 to 5%.
So on 1/3 of the portfolio, you've attempted to take 4 to 5%, but this has not gone through. So therefore, can it be interpreted then, Mr. Dhanuka, to say that that is going to have a bearing on the margins in the first quarter?
No, I don't think, since the company is having the inventory of old prices in the system. So we are able to pass on the price increase to some extent in the month of April. So I don't think that it will have any major impact, although we are predicting 125 dips in the gross margin and 100 dips down in the EBITDA margin in FY27 from the FY26 comparison.
Mr. Dhanuka, the other thing is with the Bayer Alliance, the asset transference sales from the Bayer portfolio will be expected to reflect on your books starting the first quarter of FY27. What is the exact execution timeline? How much in terms of financials will it reflect? And does it still remain viable if the macro agricultural environment deteriorates?
You see, with the Bayer, we have extended the agreement till December 2026. So Bayer will continue to sell molecule on behalf of the Dhanuka. Last year, we got around 32 crore net economic benefit from Bayer, for which the sales was done by Bayer Crop Science. So till December 2026, again, Bayer will continue to market, and we will be getting the net economic benefit. As I told you, 60% is irrigated area, so I don't foresee any major impact on the sales volume in the coming season.
I think lots to watch out for from this segment as well going ahead. But thank you, Mr. Dhanuka, so much for joining in. Always a pleasure to speak to you. But let's go back to our technical and fundamental guests as well. Mr. Dilip Bhai, my question to you is, how are you looking at this entire fertilizer chemical space right now, taking the impact in terms of supply cost pressures? And two, as Mr. Dhanuka was mentioning right now, that they are attempting to make price hikes. The May price hike is something that the market has not absorbed right now. Does that really tell you anything about the sector of what we are getting into?
So, as far as fertilizer is concerned, certainly, without any doubt, there is a very severe cost push. And then you are dependent on the government. How much are they going to give you the subsidy, and how much and how soon those receivables are going to get monetized? So I think that challenge remains in fertilizer perennially, and it becomes a little more serious when the cost push really happens in a big way, like what has happened this time. So fertilizer is something one should, it's very difficult to take a call on a secular basis. Now, as far as I think the agri-tech is concerned, agrochemicals are concerned, once again, it's like this, that a few companies have an inventory, old inventory, and few companies don't have. So in this entire chain, who is the beneficiary and who is not, it becomes absolutely company specific instead of being a very general or making a very generic statement on this particular thing. So I would be very cautious as far as these companies are concerned. I think unless and until you are closely monitoring and talking to the management, it's very difficult to know which company is going to be hit where in supply chain logistics, in cost.
Sure, and that's the attempt that we're trying to make as well, Dilip, which is why we just had a conversation with Dhanuka Agritech. Gaurav, a quick view on Dhanuka. It has come off the high point of the day. Seemingly also the market, or at least everybody listening into this conversation, paying attention to the fact that absorption of price increases has not taken place in the May round. On the charts, how does it look?
The steeper the rise, the steeper is the fall, clearly coming down from the highs. But overall, yes, pretty much of a reversal signs are visible here. But I'll still wait for a close up at 1200 before initiating a long position here in this stock.
Gentlemen, thanks so much for taking the time and for speaking to us on NDTV Profit. Significant update on HDFC Bank. This is the first cut, and turns out, sources are telling my colleague Shrimi that HDFC Bank may seek an extension for Keki Mistri's tenure, which is set to end not too long from now. Shrimi joining in on the phone line to tell us what she's heard. Shrimi, what are you picking up?
Yeah, so Alex, a couple of developments coming in. So HDFC Bank is, first of all, fast-tracking the process of identifying its next chairman, as the interim tenure, as we all know, of Keki Mistry approaches its end next month, and that is according to people familiar with the matter. And in fact, the Bank Nomination and Remuneration Committee, NRC, has begun the process of evaluating candidates for the role. Around 3 to 4 external names are understood to be under consideration at this stage. And in fact, NRC meeting as soon as next week to discuss, these names. Now, what we are also picking up that simultaneously, the bank may also seek a 3-month extension for Mistry tenure, subject to approval from Reserve Bank of India to ensure continuity while selection process still under progress. So Mistry, for that matter, a veteran banker appointed as an interim chair, but indication coming from the top sources, that the possibility of him continuing as a full-time chair role may not be considered due to potential conflict of interest and his existing commitment on couple of related entity, boards. So do note the fact that both the top position, your CEO, HDFC Bank CEO, and chairman role hinges very much on the law report as well, which could be submitted to board this month itself, is the indication we are getting. So in short, bank has both planned ready. One, to come up with a shortlisted candidate for the chairman role in case RBI doesn't agree to even extension. So NDTV Profit detailed email query to HDFC Bank, remain unanswered till put this story on air.
Okay, thank you, Shrimi, for that. So Plan A and Plan B both are ready in terms of HDFC Bank's board and management as to who comes in, whether Keki Mistry gets an extension, and if not, a couple of other candidates that are being considered. That is what sources are indicating to Shrimi Chaudhary of NDTV Profit. But we'll quickly slip into a short break. On the other side, we'll get you top buy today and sell tomorrow picks as well, and lots more lined up. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week. Down the storm.
Well, welcome back to India Market Close. I mean, it's that time of the day where we actually do heard on the street with Soumit Sarkar, but today I'm going to fill in for him with all the chatter that we're getting from the dealing room. First up, let's just pull up a few of the names which are buzzing. You have Colgate and Grasim, which we're picking up, where there are buy flows on large HNI and PMMS desk, is what dealers are indicating. In fact, they're saying that there is an expectation of a strong fourth quarter number that could be coming in as well. So both of these counter counters that are in focus. Apart from that, Pine Labs and Lenskart are the other two names where buy flows are similar in terms of the HNI and the PMS desk. And again, a strong set of Q4 numbers are expected from both these counters. Lenskart is seeing some smart moves, but Pine Labs is under pressure in today's day of trade. And lastly, you have a Patanjali Food as well. Buy flows on the DII desk, that's what is interesting on this one. Stock is up 3.5%. The delivery volumes are higher, and it seems that the selling is over, is what the dealers are saying when it comes to Patanjali Foods. And very lastly, you have Radico Khaitan and United Spirits, both of these counters from the alcohol space that are in focus, where multiple dealing rooms are recommending clients to switch from Radico to United Spirits. And that is an interesting trend. However, you have a Radico Khaitan, which is trading in the positive as we speak, and a United Spirits, which is absolutely flat. In fact, let's get in Ajit Mishra from Religare Broking as well. Ajit, good afternoon and welcome to the show. We have Mayuresh Joshi, Head of Research at MarketSmith India as well. Mayuresh, welcome. Ajit, let me come to you first. In terms of the names that we mentioned that dealer checks are indicating where there is some bit of a buzz, anything that crops up on your charts where you are seeing some interest?
Good afternoon, Hiral. So Hiral, Radico definitely tops that list because the stock is trading at the record highs, volumes are upbeat. And we have been seeing this decisive trend continuing from last several months. So means of late, yes, we had this phase of profit taking in the previous attempt. But now the stock is strongly holding above all the major averages with strong uptick in volumes. So this indicates the overall momentum is likely to continue. And 33.60, where we have the 20 EMA placed, can be the area where one can maintain as a stop. And hold their long position, can buy fresh also.
Individual. Okay, so Radico Khaitan. All right, Mayuresh, I want to come to you on a group of stocks, and we'll talk about it in more detail in just a bit. In fact, we'll get Jasmeet in to talk about the IT index as a whole. But you're seeing a second day in a row of gains for this sector, and there is a little conjecture at this point as to whether or not it is because of valuations. Is it because you might hear something from Nvidia? What do you think is at play here?
So I think that's simple as that, Alex. Afternoon to you. I think the index had got beaten and battered down. Yeah. Markets were very, very volatile, and it becomes one of the safe havens of sorts till we receive some amount of clarity on the global macro front. And therefore, I think both these factors combined together have played a role in terms of ensuring that there are decent moves across the space as we speak. But fundamentally, I think the bottom line that underpins the entire underperformance still remains the same. The expectation in terms of growth levers are still missing. The expectations of the global AI trade and the massive investments that a lot of these hyperscalers have done and are undergoing at this point of time, and the deployment of their agentic tools. I think all these are probably very, very disruptive from a medium-term perspective. And therefore, growth levers are definitely missing. I think these two factors, one, I think volatility in the market as a defensive bet, it just props up. And second, I think from a price action perspective, I think it has got beaten down and battered down to a large extent.
Got it. Okay, let me go across to Jasmeet now, because really this is the sector of the day, and it's holding at over 3%. Pull up the intraday chart for the Nifty IT. It's holding at 3.3% gains. Jasmeet, what's at play here?
Well, Alex, thank you for that. There are multiple reasons why we see the IT buzzing in trade today, gaining about 3.3%. Now, we've started with the main key reason. First one is the NVIDIA earnings, which is expected coming tomorrow post-market. Now, what we're expecting here is first we are looking at the overall AI to see the same spending momentum. Now, what happens is being NVIDIA into a chip maker machine, if they are seeing a good up move in terms of the overall buying and overall revenue top line, this would end up, say, giving an indication that the companies are spending on AI infrastructure. And for the AI infrastructure, they do require the overall IT services. That's why the IT is buzzing. The second reason is the rupee depreciation. The rupee has been depreciating and has been hitting record low since the Iran war. The rupee is roughly down 5.5%, and every 1% of rupee downtake would roughly add up 10 to 15 BPS into the overall margin. So, though it won't show up on the balance sheets, but it's still a positive up move for the IT companies given they earn in US dollar. Now, if we look at the third aspect, the Nifty IT has corrected severely over the last couple of months and over the last YTD basis as well. It's roughly down about 26%. While this shows a good buying opportunity at the current levels, given the valuations are at multi-year low. Now, fourth one is the overall valuation play where it comes in the picture. Though the mid caps are slightly expensive than the large caps at this point in time, but the large caps are really nearly at a 5-year low, and the current Nifty IT valuation altogether is as low as August 2020 level. That's roughly a 6-year low from the current levels. Now, look at the last aspect of what's overall helping the IT move is the cool off coming in on the back of that recent OpenAI-led sell-off. We are seeing people again showing the buying interest in the IT after the correction. Now, let's quickly pull out the overall chart and understand how are the valuations shaping up for the large cap IT firms. Now, if you look at the current PE, all of them are below the 5-year average. Something like a TCS, which stands at 29.8%, currently standing at 16.25 odd times when you look at the current PE. Now, if you look at the key return potential and the mid cap as well, now how the mid cap is shaping up, if you look at the next chart for something like an LTM, even LTM emphasis, even all the mid-cap IT firms are also below the 5-year valuations, but they are on the slightly expensive. Large caps are between 15 to 18 times, but mid-caps are between 20 to 24 times. When we look at the street call, the TCS with the highest buy rating of 35, followed by Infosys at 36, and the return potential is highest for TCS, Infosys, and HCL Tech. Now, what we see here is top 3 large cap IT firms are having return potential of roughly 20 to 25% for next 1 year, showing the up moves. While the mid caps, we see the return potential ranging between 8 to 19%, which was attractive compared to large cap 6 months ago. But given the large caps have fallen so much in the last 6 months, the large cap seems attractive compared to mid cap at this point in time. So all in all, we do see a good up move coming in IT, but it's a wait and watch of how does the overall Nvidia earning turns up and how does the quarterly earnings starts impacting and starts moving up for IT companies going ahead.
Thank you, Jasmeet, for that. It's very interesting to see how your large cap IT has now become attractive vis-a-vis your mid cap IT, because the trend was exactly the opposite couple of months ago. Ajit, on the charts, are you seeing any further buying interest? What would your top pick be if you have to look at the IT index?
So, Hiral, it's definitely interesting considering that last week the IT index was the biggest loser, and this week we have engulfed the entire losses. Means we are up roughly around 5.5% so far. So it's definitely interesting to see. But overall the texture has not changed much. Means it's just a rebound that we are seeing in the overall scheme of things, wherein the overall trend is still negative. So my recommendation is that especially those who were stuck at the higher levels, and if the view is short term, they may consider this recovery to utilize and reduce their position. While in the mid cap IT names, Coforge definitely looks promising the way the stock has rebounded, and in case if it manages to cross 1500 mark, probably we may see further recovery towards 1650, 1700 mark. But having said that, the overall texture is still negative. So it's basically exit opportunity to those who are stuck at the higher levels.
Okay, all right, exit opportunity. Ajit, I just realized that we didn't really take your individual stock idea. So let me ask you about that. It's also 317. And so therefore, it's a good opportunity to talk about shorter term trades that you might suggest.
So, Alex, one sector which is definitely holding strong, irrespective of what we are seeing in the index, that's pharma and healthcare, where we are not only seeing the gains maintaining, but in fact continuing the up move with every passing day. So, Apollo Hospital from the healthcare basket, wherein after this recent pause, we anticipate the up move to resume soon. So it's basically a buying opportunity with stop at 78.80 for the target of around 84.90 in the next few days. Then we have Varun Beverages. After almost like a year-long corrective phase, the stock witnessed a breakout last month, and now after this marginal pause around the breakout area, we are seeing the stock is set for the next leg of the up move. So 555 is what we are eyeing as a target in Varun Beverages, with 495 as a stop loss.
Okay, now I just want to point out that we've seen a little bit of a slide in the benchmark Nifty 50 now, about 0.7% off the high point of the day. And just that last 20 minutes or so is when you've seen most of the slide. Pull up the broader markets as well. And to a lesser extent, you will see that there has been a decline here as well. So about 0.6% from the top for the mid-cap index, and about about 0.2% or so for the small cap index. So it's small cap index is in fact holding. Quite a few stocks are continuing to buzz from the broader markets. And let's go across to Mahima now to get you that list of stocks. A few of them on account of earnings, aren't they, Mahima?
Right, Alex. So earnings plus some news flow coming in, right? So I'll start with Deccan Gold first because this is one of the counters that's seen almost a gain of intraday high, in fact, of 10% in trade today. Now trading even higher at that 12% mark. The company has basically discovered nickel and copper at its Chhattisgarh unit, and nickel and copper has been discovered after kind of completing 1200 meter of core drilling across 7 holes is what the company has kind of put out in their exchange filing. Plus, they're saying that low impact exploration activities will continue at this site. So this could, potentially, benefit the company, because we've seen in the past 2 years the company has, done, nothing when it comes to the top line. FY25 it was around 4 odd crore, and now FY26 they've done around 14 odd crore. So this could potentially, add to their top line. The next one is CMAC, where overall in terms of where the numbers go. So this is based on the earnings. Strong quarter, margins have expanded. Growth was led by higher deployment in CMAC 3 on lump sum contract basis. NLM 9 platform is revamping, and improvement in performance of subs has also kind of led to growth. Plus EBITDA has improved by higher deployment of vessels and incremental revenues from Dubai as well. Now in terms of where the numbers go, revenues saw an uptick of around 64 odd percent. EBITDA saw growth of around 96 odd percent. Margins improved to 48.7% versus that of 40.7% earlier, and net profit came at around 103 odd crore versus that of 43 odd crore. So more than double this year. Lastly, Astral. In terms of where Q4 numbers go, strong quarter led by robust plumbing volume. Growth and recovery in polymer prices also helped aid that. Plus, plumbing business delivered industry-leading 24.2 volume growth, and overall Kanpur plant ramp-up also supported growth in North Indian markets. So this is the overall view of some of the counters that are buzzing today, and why, of course.
Okay, all right. Thanks so much for that, Mahima. Quick question to you, Mayuresh, on Deccan Gold. I'm assuming that you won't have coverage, but let me ask you about anything that emerges from the earth, right? Because ultimately you're talking about companies that are focused on minerals, and you can't substitute these. Ultimately, these are core to several businesses. So is that something that you would be focused on a fundamental basis when everything else is uncertain?
Absolutely, Alex. And I think a lot of these mining stocks are actually giving strong indications in terms of the entire business model itself. If you look at NMDC, I think just as an example, right, the expectations in terms of the rare earth mineral corridors, I think that is going to be a huge say when it probably comes to the assets that they're probably managing. Godavari Power is something that we continue owning in our balance sheets. And therefore, I think a large part of these mining stocks where mining operations have probably expanded, and the expectation is that with the expansion of their mining areas, I think the reserve ratios can actually shoot up quite drastically, along with other finds that can probably do within the spaces that they operate out of, and mineral-rich belts that they operate out of. So I think mining stocks definitely remain on our focus and seem to be a good plausible bet.
Okay, and this is going to be interesting. You know what's interesting about Deccan Gold is where it's zero revenue company right now. So by the time revenues come in is the key question, because they will keep figuring out and exploring, but in the end, investors want to see the paisa. So that's what I want to see the gold. But wo paisa aega to gold dikega na. That's the question.
In the Chhattisgarh unit, forget gold. They're talking about now nickel and copper,
right?
gold.
So yeah, but and copper is the new gold as well right now. So let's see where it lands up. But Mayuresh, apart from that, your defense companies somewhere have done really well in terms of the FY26 numbers that have come in, right? Now the question over here is, the order book is very strong. 27 probably will be a year where you will have to see execution pan out. Globally, if things settle down, and all of us wish that things do settle down on the geopolitical front, do you think they will still remain in flavor to the extent that they are in right now?
Quite possibly. But to answer your earlier question first, I think दो महीने पहले वो argument हुआ था कि data is the new gold. So I think the definition of what is gold keeps on. Having said that, I think coming to your question in terms of the question at hand, I think defense companies will do well. It's a structurally secular story over a longer period of time. Because of the order book that they probably have in hand, which gives them revenue visibility over the next few years. B, I think in terms of the orders that are probably coming through and the bidding that they're probably doing, the margins are reasonable for these orders. C, I think the export mechanism and the exports in absolute terms have compounded over the last decade or so and might increase exponentially as we head and exit the next decade as well. Fourth, I think execution will not be linear, and therefore I think investors need to understand that this is not a quarter or two's perspective, but a perspective over a longer period of time, because there will be an execution challenge from one of the quarters in any particular year, and therefore longer term, I think the story still remains intact. Solar industries, valuations might be sky high, but again, I think there are a lot of tailwinds to the sector as well.
As you mentioned, BEL, the numbers have just come in. Your profits have grown around 4.5%, 2,225 odd crores is what you're tracking. From the day's lowest levels, you're seeing some recovery coming in there. Revenues have grown 12%, 10,224 is the kind of number that you're seeing in terms of the revenues as well. EBITDA up 6%, 2,982 odd crores. So that number is above what the street was estimating in terms of where the EBITDA goes. Margins will be interesting to watch out for because the expectation was, again, always double digit. Around 28-29% is usually the kind of range that you watch out for when a BEL comes in. But 11 to 12% growth in terms of, revenues, profits up around 4.5%. The EBITDA number has exceeded estimates. And if you see in terms of the margins as well, I'm just waiting for the ticker to get me the margins, 29.2% versus a 30.8%. So the margins have gone down slightly this time around. And probably that's one of the reasons why you saw that little bit of a dip that did come in terms of the stock price as well. So that's with regards to defense players. Ajit, anything that you like from the defense pack?
The overall pack, largely they are performing well. It's just that we have had phases of some profit taking every now and then. But BEL definitely is among the top performing name. Despite the recent underperformance, we believe that once, let's say, the stock surpasses this 435, 437 hurdle, then probably we are set for the next leg of the year. So here one can continue to look for buying opportunity in BEL till 410 is intact on the downside.
Ask you about a couple of stocks, Ajit, from the broader markets that are buzzing in trade. And in fact, let's pull up some of the big movers, right? Pull up the 500 if you don't mind. And Astral, of course, we've spoken about, but KC is losing about 4% or thereabouts. Berger is losing about 3.4%. Among the gainers, you have Triveni Turbine and Angel One. Angel One in the capital market play, Ajit, it doesn't have a trigger per se, but would you say that you can buy into Angel One at this point?
So Alex, a disclosure that we have recommended to our clients in the morning around 310, 312 levels and with a target of around 328. So we met the target. The stock is back to the record highs. Overall, the capital market theme, if you see BSE and Angel One, some of these they have done exceptionally well. And we believe that this positive tone might continue in the coming days also. But at the same time, after 8% of rise in Angel One, I feel that one should wait and let the stock stabilize around the record highs before the first next leg of the up move.
So that's with regards to where capital market stocks go. We're just 2 minutes away from closing. Thank you, Ajit, and thank you, Mayuresh, so much for joining in. Always a pleasure to speak to both of you and get your insights. But very quickly, in terms of where markets go, we are actually ending, Alex, in the negative. 23,600 is what you're looking at, down 0.2%. When we started off India market close, we were somewhere still in the positive, but it's becoming a negative close altogether. Your advanced decline ratio, yes, the Brueth has moved, but it's still in favor of the advances. So that is one of the key positives that I could take from today's session. Bank Nifty also, which was flat, is now down 0.2%. Let's just look at the advanced decline ratio, in today's chart, and that will tell you how that has actually narrowed as well to some extent. Your advances have come down and your declines have increased. We started off the day with 455 declines. That's nearly doubled to 839 declines in trade today. Let's look at the heat map in terms of Nifty 50 as well to understand the individual stocks, and then we'll look at the contributors very quickly. IT continues to hog the limelight, second consecutive session of gains. Eternal, Tata Motors, PV, SBI Life, Adani Enterprises were a few of the other ones. Your PSU banking space is also looking pretty strong, but what was weak was a Kotak Mahindra Bank, was probably a ICICI Bank, HDFC Bank. So your private banking space was actually putting pressure in terms of the markets today. Titan, Tata Consumer, so a couple of Tata Group companies from the consumption side also down in trade, along with Adani Ports, Coal India, Pharma Pack, so Cipla, Sun Pharma, Dr. Reddy's were a few of the names which were under pressure as we speak. So that's with regards to our markets. Let's just look at the contributors on Nifty 50, and then we'll look at the broader markets post that. In terms of contributors, HDFC, RIL, Bharti Airtel, ICICI Bank, these are the ones which have put pressure. In fact, Bharti Airtel, with the kind of surge that it saw in yesterday's session, that has actually given up gains in today's session as well. Apart from that, Infosys, TCS, it's mainly the IT counters which are trying to provide the support, but not enough to actually compete with the losers. Broader markets, let's pull up the mid cap and the small cap in today's chart and see what's happening there. You have given up gains from the day's lowest levels, but trading in the positive with gains of 0.7%, and the small cap 250 as well, which becomes important. That also has not given up gains. It's still above that 1% mark, which is a positive, where the flavor is the small cap and the mid cap space, and that's what everyone is watching out for. But clearly, the market breadth not very, sustainable. There is a tug of war that we've been seeing over the last couple of days. The setup is very weak at the bottom. For it to catch up is going to be interesting to see. And keep your eyes on Nifty IT as an index, because Nvidia will be reporting earnings tonight. Any positive commentary will have a bearing on Indian IT as well. But completely out of time. Thank you, viewers, for watching. This is a wrap on India Market Close on NDTV Profit from the team that put the show together, Alex and myself. Lots more lined up on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that has happened in today's trading session. But first things first, let's take a look at what the markets were up to, and it was a quiet day, largely a range-bound day that you were looking at. On the Wall Street, Nifty holding close to that 23,600 level. Sensex as well slipped about 100 points thereabout at close as well, but the markets were steady. Momentum seems to be a little bit missing, closed in the red. That's both the benchmarks for you, and the broader markets were slightly outperforming the benchmarks. Moving on then, let's talk about a positive close coming in for the broader market, with most sectors ending in the green as well. Gains in fact were led by IT and realty stocks, showing strong traction through the session. In fact, pressure persisted when it comes to some of your defense and financial services names, capping overall upside as well, but the market breadth improved. Sectoral divergence clearly remained in play as well. Moving on then, let's talk about the rupee that hit a fresh record low, nearing the 97 mark against the dollar. Rising crude prices, weak capital inflows and higher US yields spelled trouble for the Indian currency. And you did have pressure building on India's external finances despite RBI intervention. Now, in terms of currency, it's now weakened nearly 6% since the Middle East war began in late February, making it one of Asia's worst performing currencies this year. And just for a little bit of background, India imports nearly 85% of its crude oil requirements. As oil prices rise globally, India has to spend more dollars on imports, increasing pressure on the rupee. Moving on then, let's talk about fuel prices in greater detail. in addition to OMCs. Now, fuel prices are back in focus with OMCs also hiking petrol and diesel prices by another 90 paise per litre, taking the total increase to nearly 3.9 rupees per litre within just a week. You're looking at this sharp move coming in as OMCs continue to face intense pressure from elevated crude prices triggered by the Middle East conflict. And despite these hikes, companies like IOCL, BPCL and HPCL are still incurring losses of around 750 crore rupees every single day. And that, in fact, is the word coming in from the Joint Secretary as well quite recently. And you do have fuel that continues to be sold below cost as well, with quarterly losses estimated at somewhere close to 1 to 1.2 lakh crore rupees. The latest hike is more about limiting losses rather than restoring margins. On to Spark then, that reported a sharp swing into profit for financial year 26, but the headline numbers come with a caveat. In fact, the company posted a strong jump when you talk about the revenue. So somewhere close to 1,800 crore rupees, EBITDA and net profit also seeing a significant turnaround from losses. However, this performance has been largely driven by a one-off gain from the PRV sale rather than core pharma or even R&D operations. The stock was buzzing away in trade with that 11% uptick, but you do have some concerns around sustainability with underlying business growth still a little bit limited at this point in time, making this more of a transaction-led spike than a structural turnaround. Moving on then, let's talk about Nifty IT that extended gains supported by a mix of global and domestic tailwinds, and talk about some of the sectors that were in focus. Now, when you talk about IT, you're looking at hopes of strong NVIDIA earnings that are lifting sentiment around AI spending. Weaker rupee continues to provide a little bit of support as well to export-oriented companies. And the recent OpenAI-led correction is now seen as overdone, with valuations turning more attractive and buying interest gradually returning to the sector as well. Let's get back to stocks. Talk about Divi's Labs that was in focus as a dispute between Novartis and its Chinese partner raises fresh supply chain questions. About a 1% uptick coming in on this particular counter. And you're looking at regulatory concerns at a key plant that have led to a contract standoff, with Novartis now looking at alternative sources. Given its strong track record, you do have the existing relationship. Coupled with that, the company could see a gradual pickup when it comes to orders. Although the impact, when you talk about it, it's likely to build over time rather than immediately. On to CMEC that delivered a strong set of numbers in the fourth quarter, led by higher vessel deployment and improved execution across key contracts. Support from long-term contracts and better fleet utilization also helps drive both revenue and margins to record levels. The company also sees continued visibility. In fact, with contract extensions coming in from the likes of ONGC and incremental contribution coming in from its overseas operations, supporting the outlook. On to Eicher Motors that is in focus after it receives government approval for a large land parcel in Andhra Pradesh to support its next phase of expansion. Now, the company plans a higher than expected investment to significantly ramp up capacity over the next few years, led by both brownfield and greenfield additions. Now, when you talk about this particular expansion, it's likely to strengthen Royal Enfield's growth pipeline, with capacity set to see a meaningful increase in the medium term as well. Moving on then, let's talk about Deccan Gold Mines that is in focus, with the stock surging close to 11% after announcing a significant nickel copper PGE mineral discovery in Chhattisgarh. Key minerals, that have been identified here as well, and strengthening the case for what could be India's first integrated nickel copper PGE mine. And the company now plans to ramp up drilling to establish a mineable resource and fast-track regulatory approvals. When you talk about this particular discovery, it could be strategically important as well, especially as India looks to secure critical minerals for energy transition as well as defense needs. Moving on then, let's talk about Adani Power that is back in focus, with Jefferies maintaining a buy call and target price of 255 rupees, betting on a clear earnings turnaround. And it was, of course, a triple clearance that you had the Adani Group also get. But when you talk about the brokerage, just talking about Adani Power, they're talking about free cash flows turning positive by financial year 30, driven by a strong capacity expansion plan, ramping up to 31 gigawatts over the next few years. Now, crucially, when you talk about the risk profile as well, it's improving. Lower merchant exposure is something that you're looking at. And couple that with higher share of long-term PPAs locking in visibility, you're looking at an estimated 23% EBITDA CAGR and close to 15,500 crore rupees in free cash flow potential. The story is in fact shifting from volatility to predictability. Moving on then, let's talk about Vascon Engineering that was in focus with the stock up about 5% even at close after bagging a 131 crore rupee construction order in Jamnagar. The project involves building 4 G+12 residential towers awarded on a bill of quantities basis. When you talk about execution, it's expected to be completed within 19 months, adding near-term revenue visibility. And this order win, in fact, is coming in as the company continues to build its order book, with infrastructure and real estate execution remaining key triggers when it comes to growth. Let's also move on and talk about Apollo Microsystems that has delivered a strong set of numbers in the fourth quarter, with revenue jumping over 80% on a year-on-year basis, driven by improved execution and faster conversion of defense orders into revenues. Now, when you talk about margins, they've also expanded. We're looking at EBITDA margins inching up, signaling better operational efficiency. And when you talk about this particular counter, about 10% uptick is what you had coming in. So it was really powering through. And when you take a look at the earnings fine print, you'll know exactly why, because profitability has also seen a sharp uptick, just like the stock. Net profit almost tripling on a year-on-year basis. Even as the company continues to scale, the standout, that's an all-time high order book that you're looking at, which provides strong forward visibility and underlines sustained momentum in defense-led growth. Moving on then, let's talk about Kirloskar Industries that has reported a largely steady quarter on the operational front. Though the profitability has seen a little bit of pressure, the stock, of course, on the flip side, did not see any pressure at all. 13% uptick coming in for this particular counter. And when you talk about the revenue, that's risen about 5% on a year-on-year basis. EBITDA also inching higher, keeping margins broadly flat at nearly 12%. However, net profit, that's the one that's declined close to 8%, indicating limited flow through to the bottom line. Despite that, the company has announced a final dividend of 13 rupees per share, signaling confidence in cash generation. Moving on then, let's talk about RITES that has reported a mixed set of numbers in the fourth quarter with strong top-line growth but pressure on profitability. Revenues jumped nearly 28% on a year-on-year basis, reflecting healthy execution across segments. However, EBITDA declined close to 9%, with margins sharply compressing to around 22% from over 30% last year. When you talk about the net profit, that has also slipped marginally by about 2%, indicating limited conversion of revenue into earnings. Despite this, the company has announced a final dividend of close to 3 rupees per share, offering a little bit of support to shareholders. Moving on then, let's talk about Zydus Life that has delivered a steady set of numbers on the top line this quarter. This revenue rising over 16% on a year-on-year basis, supported by strong business momentum. Net profit as well came in higher, up nearly 9%, and the stock was of course buzzing away in trade, 3% cheering that healthy earnings growth as well. However, operationally, the picture seems to be a little bit weaker. EBITDA declined over 11%, margins sharply contracting to around 25% as well, from over 33% last year. Importantly, the companies also pointed out that EBITDA needs to be viewed adjusted for forex gains, indicating underlying pressure on profitability. Moving on then, let's talk about India's proposed free trade agreement with the European Union that could lead to duty cuts for sectors including agriculture and seafood. According to the Commerce Secretary, the official also said that this particular pact could help position India as an export hub when it comes to automobiles and manufacturing. Let's also talk about negotiations between India and the EU that are focused on improving market access, reducing tariffs, and expanding trade flows across sectors. When you talk about this particular agreement, it's expected to support Indian exporters by improving competitiveness in the European market. Both sides, in fact, are aiming to conclude this particular trade deal after multiple rounds of negotiations. Moving on then, let's talk about Ukraine's economy that is remaining resilient, has shown signs of recovery with GDP growing about 0.9% in April after slipping in the first quarter. When you talk about this rebound, it's been driven by sectors like retail, food and weapons production, helping offset earlier weakness. That said, the broader trend remains fragile. GDP is still down about 0.2% so far this year and had contracted 0.5% in the first quarter. So while momentum is improving, the recovery remains gradual amid ongoing economic pressures. And the Supreme Court has asked the Ministry of Electronics and Information Technology to examine a plea seeking recovery or destruction of Indians' personal data allegedly stolen and stored on foreign servers. Now, the petition also sought faster implementation of the Digital Personal Data Protection Act 2023 and stronger action against cyber fraud linked to data breaches. And the Apex Court has also said that the matter was highly technical and better suited for administrative and technological review rather than judicial intervention. The bench allowed the petitioner to submit the plea as a supplementary representation to MeitY. And moving on, then, India's peak power demand has hit a fresh all-time high as scorching temperatures and heat wave conditions push electricity consumption higher across the country. In fact, according to Power Ministry data, peak power demand touched a record 257.37 gigawatts on Monday, surpassing the previous high of close to 256 gigawatts recorded on April 25th this year. The spike in demand, in fact, is largely being driven by increased usage of cooling appliances such as air conditioners and desert coolers amid rising temperatures across several states. Importantly, the entire power demand was successfully met without shortages. Moving on, then, let's talk about Unacademy co-founder and test prep business CEO Sumit Jain, who stepped down from his full-time operational role ahead of the company's potential merger with Upgrad. And Jain is going to be continuing in an advisory role, and that's after June 30th, according to company statements. His exit comes as Unacademy and Upgrad seek regulatory approval for a proposed merger transaction. Jain had joined Unacademy back in 2020 after the acquisition of his startup OpenTalk and later led key verticals including Graphy and offline operations. And Zoho founder Sridhar Vembu said that the company will not expand work-from-home arrangements despite PM Modi's push for fuel conservation. And Vembu said that long-term remote work can reduce collaboration, training efficiency and workplace learning for younger employees. He's also added that in-person interaction remains important when it comes to innovation, but also organizational culture. And the comments come as several tech firms continue balancing hybrid work policies with productivity and cost considerations. On to Meta, then, that is planning a fresh round of layoffs on May 20th as part of wider restructuring linked to its artificial intelligence strategy. Reports are suggesting that the company could cut around 10% of its global workforce while shifting thousands of employees to AI-focused teams. The restructuring also includes reducing managerial layers and reorganizing teams into smaller operating units. And the move is coming in as Meta sharply increases investments when it comes to AI infrastructure and automation tools. The development, in fact, is highlighting growing pressure when it comes to tech firms to balance AI spending with workforce costs. On to Standard Chartered, then, that plans to cut more than 7,000 jobs globally by 2030 as the bank accelerates adoption of artificial intelligence and automation tools. The reductions are going to be mainly affecting corporate and back office functions as the lender really looks to improve efficiency and profitability. In fact, the bank is saying that the move is part of a broader tech-led restructuring strategy rather than only a cost-cutting exercise. Now, the company is also targeting higher returns and stronger productivity over the coming years, so do keep an eye on that. But as of now, about 7,000 jobs cut there. Moving on and on to national news, then, a major demolition drive is underway in Mumbai's Bandra East, with Western Railway targeting around 400 illegal structures in Garib Nagar. The 5-day operation aims to clear over 5,200 square meters of encroached railway land. Following a Bombay High Court order, more than 1,000 railway personnel and heavy machinery have been deployed with strong police presence to maintain order. However, the move has triggered protests from residents, with scenes of chaos as families gathered with belongings on the streets. And PM Modi continued his diplomatic outreach in Oslo ahead of the 3rd India-Nordic Summit. holding bilateral meetings with the prime ministers of Iceland, Finland, and Denmark. Earlier, in fact, India and Norway elevated ties to a green strategic partnership following talks between PM Modi and the Norwegian Prime Minister. The two sides signed 12 agreements spanning clean energy, maritime cooperation, digital public infra, space collaboration, and the blue economy. In fact, Norway also joined the Indo-Pacific Oceans Initiative, while both countries committed to expanding cooperation when it comes to sustainable growth and green shipping. And former Uttarakhand Chief Minister and retired Major General Bhuvan Chandra Kanduri has passed away at the age of 91. Prime Minister Modi expressed grief over his demise and remembered his contribution to public service and national security. Kanduri was known for his administrative reforms and infra-focused governance during his tenure in the state. Moving on then to the word coming in from the Apex Court that has refused to modify its earlier order on stray dogs, reaffirming directions to remove them from public spaces and reallocate them to shelters after sterilization and vaccination. The court has rejected all petitions seeking changes to the November 2025 ruling, signaling that the original directives will continue to remain in force. And that, in fact, is the word coming in from the Apex Court. Moving on then, let's talk about a transport disruption that may be brewing in the national capital, with taxi and auto unions calling for a 3-day strike from May 21st to 23rd. The protest is over rising fuel costs, with drivers demanding an urgent fare revision to offset higher CNG, petrol and diesel prices. In fact, unions have also warned that if the government does not act quickly, this sort of agitation could escalate into a larger protest. For now, commuters in the national capital may need to brace for a little bit of potential supply disruption and higher inconvenience later this week. And that's something that you're really watching out for. Let's also talk about a major boost to India-US defense ties. The US State Department, in fact, has cleared a $428 million military support package for India. This includes nearly $198 million for Apache helicopter sustainment support, covering engineering, logistics, training, and technical services. Additionally, a $230 million package for M777 ultralight howitzers has also been approved to ensure long-term operational readiness. When you talk about this particular deal, it involves Boeing, Lockheed Martin, and BAE Systems as well that are expected to strengthen India's defense capabilities, but also deepen strategic ties in the Indo-Pacific. On to some international news, then. Tensions in the Middle East have remained elevated, with Iran issuing a fresh warning to US President Trump as well against any new military action at this point in time. Tehran, in fact, is saying that the Strait of Hormuz will never return to its previous state, signaling a tougher stance on the critical energy route. And the warning, in fact, is coming in even as diplomatic efforts continue, as fears over global oil supplies remain firmly in focus as well. Moving on, then, let's also talk about the word coming in from Russian President Putin, who's going to be in Beijing for a 2-day summit with Chinese President as well. And the summit is scheduled for May 19th to 20th, marking the second time that the Chinese and Russian leaders have met in just the past year, as Beijing seeks to manage ties with Washington and Moscow while positioning itself as a pivotal power in global diplomacy. Russia's invasion of Ukraine in 2022 left Moscow effectively isolated and heavily reliant on Beijing for trade under Western sanctions. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience.
Benchmark indices ended marginally lower after a range-bound session, with the Nifty closing at 23,618 odd levels and the Sensex settling at 75,200 mark. Rupee hits a fresh record closing low of 96.54 against the dollar, pressure building fast for the Indian currency. Petrol and diesel prices have gone up again, the second hike in less than a week. Shares of OMCs rise after enacting measures to shield against mounting losses. Oil prices fall but remain high as Trump holds off on Iran attack. Trump says serious negotiations are in place. Brent crude hovering between $108 to $110 a barrel. Putin heads to China, says Russia-China ties have reached unprecedented level ahead of talks with Xi. Putin's visit to Beijing comes less than a week after US President Donald Trump wrapped up his China visit. Prime Minister Narendra Modi continued his Nordic outreach in Oslo ahead of the India-Nordic Summit, holding bilateral talks with leaders of Iceland, Finland and Denmark, while India and Norway elevated ties to a green strategic partnership. Triple clearance for Adani Group in the US. Justice Department has dropped all charges against Gautam and Sagar Adani, closing the New York fraud case after prosecutors said the allegations could not be sustained. All India Organization of Chemists and Druggists call for a nationwide strike on May 20th. The Pharmacy Association is demanding adequate regulatory oversight governing online medicine sales against the aggressive discounts by online pharmacy platform. Government assures no disruption in services. Shocking alleged dowry case has sparked debate nationwide. A lookout notice has been issued against the prime accused, Tusha Sharma's husband, in connection with the case of her suspicious death. Hello and welcome viewers, this is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on markets, national as well as international news. Let's begin this evening by first checking on how the action today was on Dalal Street. Benchmark indices ended the day in the red after a range-bound trading session. The Nifty closed below the 23,650 odd mark, while the Sensex ended lower at 75,200 odd levels. Kotak Bank and Tata Consumer were among the top laggards on the Nifty, though broader markets outperformed benchmarks and sectoral trends remained mixed. My colleague Parth now joins us with all the market action. Parth.
So Nifty has closed below 23,650, down by almost 0.2% today. Kotak Mahindra Bank and Tata Consumer Products were the top losers in Nifty, both of which were down by over 2% today. The broader market has outperformed the benchmark today, with the Nifty Midcap 150 snapping its two-day losing streak and gaining over 0.5% today. This was led by Tata Technologies and IDBI Bank, both of which were the top gainers in Nifty Midcap 150 today, up by over 5.5%. Nifty Small Cap 250 has also snapped its 2-day losing streak, gaining over 1% today, led by Triveni Turbine and Angel One, both of which were up by over 8% today. Now moving on to sectors, we saw a mixed performance with Nifty IT being the top gaining sector, up by almost 3%, and this was led by Coforge and Infosys, which were the top gainers in Nifty IT, both of which were up by over 4.5% today. On the losing side, we saw Nifty Financial Services, which was down around 0.2%, which was led by Kotak Mahindra Bank. Now moving on to sectoral trends, Nifty Pharma has ended in green for the 5th day in a row, while Nifty IT ended in green for the 3rd consecutive day. About others, Nifty Metal and Nifty Bank have ended in red for the 3rd consecutive day, while Nifty FMCG has also closed red for the 2nd day in a row. Also, Nifty Oil and Gas, Nifty PSU Bank and Nifty Realty have snapped their 2-day losing streak.
Well, thank you so much for all that summary on today's market action. Viewers, market veteran Sameer Arora believes India's markets are still in a strong position despite global uncertainty and rising oil prices. Speaking to NDTV Profit, Arora said India can handle crude oil even if prices touch $100 a barrel, adding that a higher import bill is not the end of the world. Listen into his view.
It is not that the currency market is independent of the stock market or that the stock market is independent. They all feed on each other in that sense. It's just that maybe they have gone on too far, and now we are obviously hoping that there is some improvement in the Iran war, and therefore a little bit oil falls. It's not necessary that India cannot handle a $100 oil, because in a macro sense, the dollars involved are not as much as the panic that we are seeing.
Viewers, but despite that confidence and optimism, I'd say, the Indian currency has been hammered down to multiple record lows just today. It slipped to a fresh record low of 96.57 against the dollar as volatile crude oil prices and escalating geopolitical tensions in West Asia continue to pressure the domestic currency. And look at the way oil prices have been swinging, especially in proportion to Trump's remarks on the Iran war. Yesterday, international crude benchmarks rose after Trump warned Iran that the clock is ticking, in his words. And today, Trump said that he would postpone a planned military strike on Iran following requests from key Middle Eastern leaders. This has eased fears of an imminent escalation that could disrupt global crude prices and supplies. And therefore, the result is on your screen with regards to how crude has behaved today. So until a deal is done, India will do all it can to protect its import bill. Oil will most likely continue to see a seesaw momentum, and geopolitical uncertainty may cloud equity aspirations in the short term. But listen into what Trump exactly said.
Well, other countries have come to me and they've said we were getting ready to do a very major attack tomorrow. I've put it off for a little while, hopefully maybe forever, but possibly for a little while, because we've had very big discussions with Iran. And we'll see what they amount to. I was asked by Saudi Arabia, Qatar, UAE, and some others if we could put it off for 2 or 3 days, a short period of time, because they think that they are getting very close to making a deal. And if we can do that, where there's no nuclear weapon going into the hands of Iran, I think, and if they're satisfied, we will be probably satisfied also. We've informed Israel. We've informed other people in the Middle East that have been involved with us. I was called by these 3 countries plus others, and they're dealing directly with our people and right now Iran. And there seems to be a very good chance that they can work something out. If we can do that without bombing the hell out of them, I'd be very happy.
Maybe Trump has held off its attack on Iran, but days after announcing a standard 3 rupee per litre price hike in diesel and petrol, India's state-run oil marketing companies have introduced another hike of 90 paise, taking the total price hike in fuel prices to 3 rupees and 9 paise per litre. The hike in domestic prices come as OMCs, which are oil marketing companies, have been bearing the brunt of elevated global crude oil prices due to supply disruptions amid the Strait of Hormuz blockade. My colleague Somit breaks it down. How much would be the impact on consumers and OMCs, Somit?
This is the second price hike that we are seeing in the last 4 or 5 days. To be approximate, 4 days. Second hike in the last 4 days that we are seeing for petrol and diesel. And this time the hike is anywhere around 0.9 rupees per litre, which is much lower compared to what the first hike was, which stood at close to rupees 3 per litre. Now, why this hike? Because earlier the government had clearly made a statement that the oil marketing companies are staring at a loss of close to 1 to 1.2 lakh crore rupees for the first quarter of FY27. To lower this losses, we are seeing this price hike coming in from the oil marketing companies on petrol and diesel. Now, what could be the impact on the oil marketing companies? Now, as per analysts, every 0.5 rupees per litre increase in the fuel margin will lift the EBITDA for IOCL, BPCL and HPCL from anywhere between 7 to 11%. And to just give a simple math from what the statement we had earlier, as per the minister, the daily oil loss was around 750 crore rupees per day. Daily loss for the oil marketing companies stood at close to 750 crore rupees per day, and this was after the hike of 3 rupees per litre. Now, that hike had lowered the losses by around 25%. Now, on a daily basis, India consumes close to 463 million litres of petrol and diesel, of which 90% originates from the state-owned oil marketing companies, that is IOCL, BPCL and HPCL, which stands at close to 417 million litres. So, assuming this 0.9 rupees per litre translates into a profit of around 38 crore rupees per day, which will this amount will reduce the loss for the oil marketing companies by another 5% odd. So this couple of price hike that we have seen in the last 4 days now reduces the losses for the oil marketing companies by at least around 30% odd.
Okay, so losses have been reduced by 30% odd, but as Somit rightly mentioned that this is the second hike in just 4 days, but the government is following a calibrated approach on fuel price hike. And these are not my words. These were said by M.K. Surana. He's a former chairman and managing director of state-run OMC HPCL. But the real question is the second 90 paise hike enough amid the rise in global crude prices? The answer to that lies in his statement. Listen in.
Because there are 2 price hikes within a week, it means that government is willing to bite the bullet. That is one. Second, the very fact that the price hikes are lesser than what was anticipated, it means that the government is still following a calibrated approach and it is trying to protect the consumer as far as possible and as long as possible. Now, the third part is that whether this 90 paisa is good enough. The question is that if you see the last price hike, at that time, the crude price was around $107 and the exchange rate was around 95.1 or so. Today, the crude price is around 111 and the exchange rate is around 96.5 or so. It means that the 90 paisa will be lesser than what would have been required for the increase in the crude price and the exchange rate in last 4 or 5 days itself. So I think government is still following a calibrated approach and keeping its options open.
Viewers, so we gave you the news, we gave you an analysis, and we gave you an industry voice. Now it's time to listen to what people have to say. My colleague Anuj Raite joins us with a ground report on people's reaction on the same.
Well, yes, if you speak about Mumbai, the petrol prices now have increased to 107.5. 107.51, and as you can clearly see, this is the second hike that has taken place in the last few days. I'm standing on one of the petrol pumps here in Worli where people are queuing up to get their vehicles filled up with fuel. I've got one such individual here with me. Excuse me, sir. पेट्रोल का प्राइस वापस एक बार बढ़ गया है 0.91 पैसे से इस बार 0.91 रुपीस से इस बार प्राइस बढ़ा है. आप पेट्रोल यूज़ करते हो, क्या कहना चाहोगे आप पेट्रोल प्राइस के बारे में?
इतना प्राइस जो डेली बढ़ता जा रहा है सो उसमें नॉर्मल लोगों को तो प्रॉब्लम आ ही रही है और इतना हेक्टिक हो गया है लोगों के लिए कि हम मतलब जो हम एवरी वीक में एक बार पेट्रोल भराने जाते थे तो अब वो 10-12 डेज़ के बाद भराना पड़ रहा है. ट्रैवलिंग थोड़ी कम हो गई है और बहुत हेक्टिक हो गया है सब चीज़ों.
There you heard it from the normal Mumbaikars who use vehicles on a regular basis, and they are sharing their problems with the price rise. You see, it is not just limited to the fuel price rise, because as we've been discussing it since morning, it also affects the corresponding businesses like deliveries, like the hike in the ticket prices, which might happen as far as even a ST or state transport system in Maharashtra is concerned, and it has surely given a hit to the daily lives of Mumbaikars.
And viewers, apart from oil, there's another commodity that's in focus. The International Sugar Organization has flagged the risk of a potential global sugar deficit in the 2026-27 season, warning that El Nino conditions could hurt harvests across key Asian producing nations. While the market is currently staring at a surplus, weather-related disruptions remain a major concern for the upcoming season. My colleague Sharad joins us with more details of the same. Sharad.
There is a concern, especially for the Indian sugar players. Why? Because there is an issue of the harvest which can be impacted for the next season because of El Nino. Remember, this season the numbers were pretty strong for the global sugar production, a higher output coming in for both India, Pakistan and Thailand as well. And there's a surplus also. But for the next season, that's where the concern starts coming in. Sentimentally, the impact is negative here. Because of this harvest, and the idea is that the domestic prices might cool off also. Remember, last week itself government also announced and they banned sugar exports from most of the countries except North America and Europe until September 2026. And also remember that the global sugar prices, the moment ISO came out with its forecast, started falling. For the last 3 days, global LME prices is down 5%. And from March lows itself, however, because of the rising crude prices and their derivatives, even the sugar prices went up, and because of that we can of course see some interest in ethanol diversion as well. But what's there for the next 3 months, that's important. There's a neutral pricing expectations in the global market, and the precautionary stock building might happen because of the potential disruptions due to the fertilizer shortage, and there might be increased price hedging amongst the importers as well. So this is the entire picture for the global sugar as well as the domestic sugar industry.
Right, thank you so much for that 360-degree view. But to understand the likely impact on crops and sugar output, let's listen into what agriculture economist G. Chandrasekhar had to say on this development.
We should not read too much into the El Nino forecast, number one. But that does not mean El Nino does not exist. El Nino is looming, number one. Number two, the IMD has very clearly said that by the end of this month, end of May, they will come up with region-wise forecast of rainfall. And therefore, it is not the total quantum of rainfall by the end of September that is important. But what is important is the spatial and temporal distribution of rainfall.
Moving on, viewers, India's peak power demand has hit a fresh all-time high as scorching temperatures and heat wave conditions push electricity consumption higher across the country. According to Power Ministry data, peak power demand touched a record 257.37 gigawatts at 3:42 p.m. on Monday, surpassing the previous high of 256.11 gigawatts recorded on April 25th this year. The spike in demand has largely been driven by increased usage of cooling appliances such as air conditioners and desert coolers amid rising temperatures across several states. Importantly, the entire power demand was successfully met without shortages. The Power Ministry now expects peak electricity demand to climb further and touch 270 gigawatts during the ongoing summer season. Meanwhile, Prime Minister Narendra Modi continued his diplomatic outreach in Oslo ahead of the third India-Nordic summit, holding bilateral meetings with Prime Ministers of Iceland, Finland and Denmark. Earlier, India and Norway elevated ties to a green strategic partnership following talks between PM Modi and Norwegian Prime Minister. The two sides signed 12 agreements spanning clean energy, maritime cooperation, digital public infrastructure, space collaboration and the blue economy. Norway also joined the Indo-Pacific Oceans Initiative, while both countries committed to expanding cooperation in sustainable growth and green shipping. The India-Nordic Summit is expected to focus on trade, clean technology, climate action, innovation, and Indo-Pacific cooperation amid evolving global geopolitical dynamics. Viewers, sources tell NDTV Profit that HDFC Bank's board is likely accelerating the search for a new chairman, with KK Mistri's interim tenure set to end next month. Sources say the Nomination and Remuneration Committee is currently evaluating potential candidates with 3 to 4 external names believed to be under consideration. We're also picking up that the bank may seek a short extension of around 3 to 4 months for Mistri's tenure, although that would require RBI approval. HDFC Bank has not yet responded to NDTV Profit's email query so far, and that's an important point to take note of. But moving on, Adani Enterprises has reached a settlement with the US Treasury Department's Office of Foreign Assets Control, or OFAC, in a sanctions violation case related to alleged Iranian origin LPG imports through Mundra port in Gujarat. The company agreed to pay $275 million to settle potential civil liability. Let's go across to my colleague Nimit, standing by for more details. Nimit.
Yes, so this is actually a triple win for Adani here. Over the last week, they've settled all their 3 big pending cases in the US. Of course, most recently with the OFAC, like you said, but also with the SEC and the Department of Justice. All 3 have been cleared. First, let's look at the US DOJ criminal charges. This was the big one that's been going on for 2 years. It was about bribery and fraud, and that's now been cleared. The second big case was with the Securities and Exchange Commission. This was a civil crime because of disclosure, misleading disclosures. This has also now been cleared with an 18 million penalty. Thirdly, there's the OFAC case with the US Treasury Department. This has also now been cleared. This was the alleged LPG sanction violation with Iran. That has now also been cleared. Now, let's have a deeper look at all 3 of these cases one by one and understand what they mean. Let's first move to the DOJ case. Now, remember, the case with the DOJ was about criminal charges. This was the long running case that's been going on for about 2.5 years now, where the DOJ was looking into alleged bribes and frauds that were allegedly paid by the Adani Group to gain some solar contracts. Now, this has been going on for 2 years. Adani has maintained that it did no wrong. That has finally come through, and the DOJ has dropped those charges in the case. Important legal overhang this was for Adani because of its investments and for finance. That has now been cleared. A very important point to note here is that the case has been dismissed with prejudice. What that means in legal terms is that this case cannot be reopened again. It has been permanently closed. Now, the prosecutors here have dropped the probe completely after a long investigation period. Legal experts say that this means that they likely did not have a case strong enough to go to court with this, and that's why the settlement talks were on, and now the charges have completely been dropped. And lastly, it's also important to see that the closure marks a decisive legal moment for Adani, who can now go forth into the global world as it has been doing without this overhang of a legal regulatory proceeding against them. Next, let's move on to the Securities and Exchange Commission's large case that's been going on, but the largely civil case that's been going on for misleading disclosures. Now, the case has ended with a small settlement amount. Legal experts say that the settlement amount of 18 million is very standard in these cases. The SEC most likely settles most of these civil cases, and that's what's been done here. This was a rather smaller case that was against Adani, not one of the bigger ones. In any case, these misleading disclosures, the Adani said that they did not make these disclosures. What really happened was that all of this happened in India, related to events in India, and the US did not have jurisdiction or the ability to try the case. And the SEC, while not directly saying that, but with not admitting or denying Adani's guilt, has decided to settle that case. No admission of wrongdoing in settlement is one of the key findings of this settlement proceeding. This is not very standard because the SEC may not have had the evidence that it needed to proceed with the case. That's why this sort of finding comes. The civil case exit clears the path for Adani's global capital market raise. Global capital, of course, comes with certain conditions, and companies struggle to raise money, especially at the Adani Group's level, where there is even an allegation against them. That's been lifted, and the global capital markets are now open to Adani completely. Regulatory cleanup strengthens Adani's investor narrative. Of course, the same thing that we've been saying for a bit, that it's been moving forward for a bit. The allegations have been sitting over their head like a cloud. That cloud has now cleared over their head. The last proceeding that we got information about last night, in fact, is the OFAC probe. Now, this was into LPG imports into India, bypassing Iranian sanctions. Now, this was all allegations that were made. Adani Group has been challenging these allegations again with the US regulator and the US Treasury for a long time now. That has been cleared. The Adani has denied this wrongdoing throughout these proceedings, and also this settlement resolves any sanctions liability without prolonged litigation. While they've been denying it, but if they hadn't settled this matter and paid that $275 million, they would have prolonged litigation that goes on in the US for a long time. That again creates that legal cloud over their head where they cannot do business fully and freely. Now, the Treasury deal draws a line under the Iran-linked probe. Now, what this means is that this Iran-linked probe, because of sanctions violations, opens a whole new gate, a plethora of different legal issues that may arise. That's been closed for Adani now for the time being and permanently in this case. Now, the OFAC resolution also completely keys us into this legal wrap-up of what Adani is doing here. There were 3 pending cases against them. All 3 have been now closed against Adani. These 3 pending cases were hanging over them for 3 years now, 3 years, 2 years, and 1 year respectively. They've now been closed. This final closure clears the deck for global expansion push.
Thank you so much for that, Nimit. A lot of information to wrap around, I must say, but then many positives. In fact, after Adani Group closed US regulatory probes, experts are betting big on the group. While speaking to NDTV Profit, Swapnil Kothari, senior lawyer, Supreme Court, and HDFC Bank's chairman KK Mistry gave their insights on how the settlement will be a big relief for the investors and also a major boost for India's economy. Let's listen into their remarks.
I think in India, they have the highest standing in terms of credit. In the international market, this SEC matter could be playing on the minds of certain lenders, certain banks globally. And with this matter being put to rest, I think their borrowing costs would also improve, and there'll be more banks who should want to come forward and lend money to the group. So if they were able to raise funding from overseas at an even lower rate, then that will contribute in an even more meaningful manner to India's growth story.
A lot of people internally within the United States have complained about it, that these laws are way too strict, way too tight, and the interpretation of it is way too strict so as to literally suffocate and asphyxiate people who want to do business, not only within the United States, but people from outside the US who want to do business. So that is where I think there'll be a lot of corrective mechanisms going forward by the United States to ensure that it still remains the most business-friendly country, so-called business-friendly country in the world, where literally the Adanis and the Ambanis and all the other conglomerates literally have no problems in lifting money from their banks, because that is what they want. They want their banks to lend out money to us. And if these are the kinds of situations that are going to accost me as an Adani Group, I'm going to be thinking twice that, okay, be that as it may, I'll have to deal with the United States, but let me engage US lawyers in the first place to ensure that I'm not, I'm towing the dotted line. It's as simple as that. But it is overreach. Absolutely an overreach.
Viewers, it's now time for a national story, a story that has been ruling our algorithms recently. The mystery surrounding the death of Twisha Sharma is deepening with every passing day. Even as investigators piece together the final moments before her death, the hunt is intensifying for her husband, Samarth Singh, a Bhopal-based lawyer who remains absconding after an FIR was filed in the alleged dowry death case. The Bhopal police have now launched a full-scale manhunt. The Deputy Commissioner of Police has announced a reward of 10,000 rupees for any information leading to Samarth's arrest, and a lookout circular has also been issued against him. Meanwhile, chilling CCTV visuals accessed in the case show Twisha heading towards the terrace moments before chaos erupted inside the house. Soon after, panic appears to unfold, with 2 men seen attempting CPR one after another as family members rush in and out. The mother-in-law is briefly seen checking on Twisha before heading downstairs, and shortly after, 3 men are seen carrying Twisha down to the terrace area. The visuals are now expected to play a crucial role in the investigation. But that brings us to the end of this edition of Profit 360. Stay tuned. This is Malika Mishra. Thanks so much for watching NDTV Profit.
India's unshakable news habit. NDTV.com. is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance.
Presented by Canara Bank. Together we can.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. This is the show where we get you interesting companies, be it earnings, small caps, mid caps, or any type of a hidden gem. Today also we have one interesting company, but before that, let me see if you can guess that company or not. It's the second largest player in the Indian tile industry. Of course, you must be getting a couple of options by now. They delivered a very strong operational Q4 numbers, and because of that, the stock is also showing good momentum. Also, the third important, hint is the stock is up 32% from March lows, and I would like to put in one more bonus hint for you. Now, I'm sure you'll be able to guess it. The brand ambassador is Salman Khan. So now you're trying to understand which company this is all about. But to put that in perspective, this company is Calcutta-based company. It's from West Bengal. It is Somani Ceramics. This is the company which we are talking about. A little bit of rebranding also here last time, which I saw the logo. But why are we calling this company? Of course, this is on the numbers, Q4 numbers. That's one of the most important questions to be asked. And the company has actually done well. The first question is why we are getting this company is the Q4 numbers, Q1 numbers, especially because of the rising costs. Will that be impacted? That's the first question to be asked. Second question is the price hike. Will we see more price hikes happening? At least we have seen in the month of April already. Will it go more? Also, the third important questions to ask is the FY27 volume and margin outlook. How much growth is expected in the tile segment or the ceramic segment? And also the demand, will it be muted from the real estate segment going ahead, or is there something else to this story? Apart from that, the question will be the current plant capacity utilization and overall the capex outlook if the company is doing. I remember around 80 to 90% is that number, and also of capex, whether the company wants to do capex in this type of market scenario or not. So these are the key questions we will be asking this company, and of course the market share picture, because whenever there is a stress in the industry, there is a market consolidation and some benefits might come in here as well. And Abhishek Somani, the MD and CEO of the company, will be answering all our questions. But let's try to understand what the company actually does and understand which new segments the company might enter going ahead as well. It was founded in 1968 and it's India's second largest tile player in terms of market share. Also, it deals with tiles, sanitary ware, and recently you could say bath fittings also the company has gone into. But let's see how the capacities actually pan out. A tile capacity is roughly 75 million square meters per annum. Also, after tiles segment, we are having the sanitary ware capacity and lastly the bathware fitting. So three major drivers when it comes to the overall capacity. But apart from this, let's see what else is there details which should be in your radar, and that is the exports. They do it to 46 countries across 6 continents, and that is where it becomes a global player. Almost 9 manufacturing capacities are there. Also, they're spread out. It's not only Gujarat and the Morbi cluster, that's where the concern comes in, but Haryana and Andhra Pradesh is also there. So they have geographical diversification also. Almost 2,900 network of dealers and 514 showrooms in India itself. This is the key details coming in. But the tile volume sales which have happened, Q4 you take it or even FY26, it's not been that strong. Just 2% growth has. So a little bit of concern on the volume growth front as well. Sales mix, let's see how things pan out. The own manufacturing is just 26%. So at times it is asset light. That's why the ROC numbers might be on the higher side. 34% is roughly the, you could say the JVs and other segment also. That means outsourcing also happens. So it's a kind of an asset light mode as well. Q4 numbers, that is one of the main reasons we are getting the company. They have hiked price hikes between 16 to 70% in the month of April as well. High utilization has boosted the margins. As expected, that was a weaker quarter, but the company has done well. Also, 82% utilization is coming in tiles. Let's look at the other segment also, what the utilization level stands, and that's roughly 83% in the sanitary segment and almost optimum capacity in the faucets. It's a part of the fitting segment, but largely in FY27, the growth outlook, they're expecting a single-digit volume growth in tiles. They have been stating about that, and a double-digit when it comes to the sanitary ware. Of course, this is having a higher margin as well. Also, 100 and 150 basis points of EBITDA expansion is expected in FY27. But what may work for the company? That's very much important to understand. As I mentioned, benefits of consolidation and market share gains. That's the first point. The second point, better pricing power. They are able to give out price hikes in a much better way as they are kind of an industry leader. Diversified manufacturing setup. Morbi में impact जरूर आया है, लेकिन इनके धंधे में of course देखा जाए North India, South India also they have manufacturing setup and that has not been impacted. Improvement in the working capital and the reduction in net debt. Of course business is something important, but the working capital ratios and balance sheet is also improving. No major capex they have planned in FY27. That means a little bit of conservative stance, and maybe that's why the market may reward this company. So these are the reasons what may work, but what may not work. Kya concerns hai? This is of course the demand for real estate. That numbers are not very big as well, so it's mixed. So some kind of impact can definitely be there. Both propane and LNG prices are high. These are the raw material costs when you build a ceramic sector or the tile industry. That is where the impact comes in. Or ज़्यादा impact March quarter में नहीं आया है. The impacts have started coming in April and May. April has already seen a slow demand owing to the low Morbi JV volumes as well. So concerns are definitely there, and this is one of those sectors which is not widely tracked, or you could say is not that favorable as well. But that's our duty to find, whether any alpha is there in these sectors or not. But in the KYC show, what are the important rating parameters we should understand? Income statement, balance sheet, cash flow, these are the important ratios which are there from the financial statements. Return ratio is something we should be looking at as well. Shareholding has the promoter's stake changed or FISDIs have lapped up? Street cred, of course, we'll try to understand short-term basis how much money has been done. Is there any issue on the long-term basis if you're holding the stock for a longer period of time? And valuations, we'll try to compare it with Kajaria Ceramics because that's the only apple-to-apple comparison, and the outlook as well. How things pan out going ahead seems mixed right now. But let's start with income statement, the first rating parameter, and see what's happening. The 3-year CAGR numbers have been largely flattish. Nothing much interesting, nothing very big of, growth coming in. So a little bit of concern coming in. But the Q4 numbers, on the other hand, that showed a good resilience. Why? Because people expected it would be under a pressure quarter, but the company did definitely a good turnaround. Just look at the jump happening from this 8.1% to 11.2%. So this is where the margin up move has happened. Of course, the capacity utilization is still on the larger side. And just look at it, the trajectory, and now a very big move happening at 11.2%, that margins coming in. So definitely the margin has done well. So it's kind of negating. Past might be a bit flattish, but there is, signs of reversal happening in, especially in the fourth quarter. The question is it an inflection, or there is a pain back in this in first quarter? So right now it's a neutral rating when it comes to the margin trajectory. Let's talk about the balance sheet. Also, the balance sheet is showing good strength. Why? I'll explain you. The borrowings, the net debt to ratio, if you talk about it, that is coming down. And during this time, the company is not expanding also. So your ROC numbers also expected to look nice. And the balance sheet management is really strong, and is the working capital days also. So net, I'm going to give this a thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet, but let's try to understand the cash flows. And of course, the cash flow improvement has also come in this space as well. From FY24, there is a good move at 247 odd crore rupees. Of course, the net operating cash flows, they have also improved. So net, there is a strength in the cash flow segment. But nevertheless, remember, take things with a pinch of salt, especially over the next 2 quarters. It will be volatile for this industry. Because of that, I'm going to give this a neutral rating. I spoke about company's capital allocation policy. I spoke about the return ratios, and now it's at a healthy pace, and it has maintained itself at least for the last 3 years between 12 to 14 odd %. And the way going ahead, the capital allocation policy, no major capex is there. So we might see these numbers on the slightly on the higher side as well. The way they have maintained it, it's a strong thumbs up when it comes to the return ratio, especially the return on capital employed. So 4 ratings are done. Let's talk about the shareholding, and there isn't much to talk about it. Nothing has changed. Promoter stake wahi ka wahi raha hai 2 saal mein. FIs and DIs also largely haven't moved much. Slight, increase coming in from the FIs, which is very minuscule. For DIs, a slight dip, but net, it has showing a strength across all the holdings which are there from the respective folks like promoters, FIs, DIs, and public. So it's a neutral rating when it comes to the shareholding segment. Let's move on to street cred. How things are panning out. Did the stock actually make money for you, or is this stress, or you could say, is there a stress in this sector? And yes, there is a stress in this sector. Why? I'll explain you. From 2025 highs, the stock is still down 25%. Of course, its peers have also been impacted. So has the company been. From March lows, of course, we saw a lot of mid-cap, small-cap going up. And over here, this company went up 32%. But if you are a long-term investor, 1 saal mein paisa nahi bana, stock is down 6%. And if you are holding the stock for 5 years, the stock is literally flat. And that is where the concern comes as a shareholder for you when it comes to the street cred. So from this analysis, I'm going to give this a thumbs down for this segment. But if the prices have come down, do the valuations become attractive? Yes, they do become attractive. And because of that, of course, Kajaria Ceramics, there's a 12-month forward P is just 28 times. Compare that with Somani, it is 17 times. So there is a good discount if you compare it with the peer. But let's just see how the 5-year average P also comes in. Somani Ceramics, it's at 19 times. So it's still cheaper from its 5-year average P also. And of course, its peers' valuations is also cheaper than the 5-year P also. That means long-term average ho ya peer ho, usse sasta ye company hai. And that is why the risk-reward ratio becomes very good for this counter, and that is why I'm going to give this a thumbs up for this. But last one let's talk about, and that is the outlook. Outlook is very much important. I had shared with you the EBITDA and the industry growth or the volume growth for the company, but apart from that, there are concerns on the real estate demand, and that is true. Also, higher raw material pricing may impact in first quarter. March में बहुत कम impact आया था, April में ज़्यादा impact देखने मिल रहा है. The propane dependent units have been impacted in the Morbi cluster. That's coming in from the management as well. We'll try to understand a little bit more. But on the other side, 21 analysts have 100% buy rating as per the Bloomberg. And of course, we see there is an up move here, return potential of 29%. अगले 12 महीना में टारगेट प्राइस 575 यानी कि 575 कैन बी द टारगेट प्राइस द रिटर्न पोटेंशियल फ्रॉम करंट लेवल्स टू ऑलमोस्ट 30% सो देयर इज रिस्क रिवॉर्ड रेशियो फेवरेबल एंड आई हैड मेंशन्ड यू दैट एंड बिकॉज ऑफ दैट still to balance things out I'm going to give this a neutral rating when it comes to the outlook. But let's try to understand what's the entire KYC rating. So Somani Ceramics, has the company passed the test of KYC? And largely it seems like it has. Income statement and cash flows has been neutral, but the balance sheet management has been strong, be it the working capital or even the debt reduction. Return ratios, ROC levels improved. Of course, no major capex also. You can expect these numbers to go up. Street cred, the stock hasn't given much return to the investors, especially the long-term investors, and that's a concern coming in. But valuations are quite attractive, so I've given a thumbs up. And outlook is still neutral because the analyst community is bullish. But on the other hand, the rising costs, the demand is definitely giving us a gloomy picture about the sector as a whole. But nevertheless, it's a big company, so it might find its way out and be a benefit of market consolidation. But total rating parameter, we have given this company 5 out of 8. This is the number we are talking about. Largely, it's neutral to slight positive in the historical numbers which we talk about. And to understand more, we will be joined in by Abhishek Somani. He's the Managing Director and CEO at Somani Ceramics, and interesting snippets about him. He has almost 3 decades of experience, and the way he started in the company, he joined just as a management trainee in the year 1995, and now he is the MD and CEO. And of course, he is also the ex-chairman council of Ceramic Tiles and Sanitary for 2021-2022. And we are joined in by Abhishek Somani. He's the Managing Director and CEO at Somani Ceramics. Good afternoon, Abhishek. It's always a pleasure to have you at NDTV Profit, and of course a good set of numbers, especially the margin front that actually surprised the entire market. Just wanted to understand, will this momentum continue in the first quarter as well? Because I presume that higher raw material prices are expected to hit the company in the first quarter. Just wanted to get your view on the Q1 outlook on that.
Yeah, hi, thank you for having me. I think what has happened is that the fuel prices is the major input cost, which is 30% of our input cost is just one element, which is natural gas or any gaseous fuel. So to that extent, we've been able to currently pass on the prices. Almost all of the prices have been passed on. As you can well know that March, because of old inventory and some other inventory at older prices, we had to put in a lot of material in the system. A lot of the other manufacturers dumped even more than what normally they would have done. So the dealership networks were completely filled with inventory in the month of April. So April was a flattish month. May onwards, we should start growing. So tiles being such a inexpensive product compared to its other peers, which is any other kind of stone or wood or anything else, I think there is enough and more for us to look forward to, even with the price increases. Because if you look at a price, the amount of price we have increased, it's almost as much as what it had gone down in the last 24 months. So we're kind of at neutral levels from 24 to 36 months ago kind of pricing.
And Abhishek, speaking of price, any kind of further price hikes we can expect in the coming weeks or maybe in the next 45 days?
That will largely depend on how the gas and the Brent moves, because most of our gas is linked with the international gas pricing and the Brent pricing. So if that goes up, then that's something which we will have to do at that time. But currently, we have outlook of what the prices are in June. The prices have gone up a little bit for the western sector, which is the Morbi units, the all of Morbi. So maybe there's a very, very marginal price increase of a rupee or two. But yes, there could be a small price increase in June.
Okay, so marginal price hike you can expect in June itself. That's what the management is talking about. But let's talk about the FY27. Let's take the whole year in view. You have given an EBITDA margin expansion of 100 to 150 basis points. And of course, growth, single digit growth coming in at least in the tile. Just wanted to get, what's the rationale for this outlook?
I think first of all, the caveat is that nothing else surprises us in terms of fuel or any other geopolitical issues. But having said that, I think we're in a good shape because capacity utilization should go up. There is trouble and there is pain in the Morbi sector. I think about 10 to 15% of Morbi will not start at all, which means that much less capacity coming into the market. From that point of view, like I mentioned earlier, tiles is still the most effective flooring and wall material from a builder point of view, from a consumer point of view. So therefore, we've had a poor 2 years of demand growth. We were seeing demand growth in the last quarter. In fact, since Diwali, we've been seeing some steady demand growth. That should, if that momentum continues over the year, we are looking at a decent high single digit growth, and that would push up our capacity utilization. Like you mentioned earlier in your show, that our balance sheet is strong, we have good cash flows, and no further major expansions this year. Therefore, with the capacity utilization going up, that would all come to the bottom line.
Right.
And even if this quarter there is a particular low demand, because when prices go up, it takes time for the market to absorb that pricing, get used to that new normal. But like I said, the product is so cheap compared to the other peers, there will be a pent-up demand, exactly how we saw after COVID. So I'm not really worried for the long term.
Okay, so tile will have a pent-up demand as we've seen in COVID. But how the real estate demand trends looking like? Seems a little bit of muted sentiment here.
Yes, so the real estate demand, as far as we're concerned, what you're talking of, the muted sentiment, is for the new launches and the new sales. But please let's not forget that whatever we are selling now is for those real estate projects which were launched 2 years ago. So all those are coming into finishing stages. Therefore, for us, that's not a worry immediately. That could be a worry couple of years down the line. But for now, we are supplying to all those real estate projects which were launched a long time ago.
Okay, so you're not worrying for the existing projects, at least for the last 2 odd years. But just let's talk about the numbers also, Abhishek. The capacity utilization levels were around 80% plus. You're expecting this for the first quarter or the second quarter? How much these numbers can they hit that 90% mark, or like to wait and watch?
So capacity utilizations currently, last year we finished at about 79%, and we are looking at about 83-84% for this quarter, because some of our plants only started from May onwards, and April. I think about 2 of our plants were shut even in April, although that's only about 10%, 15% of our capacity. Therefore, I'm saying that it would be in the mid 80s range or early 80s range for this quarter, and then it'll start moving up as the year pans out.
Okay, so utilization levels is around 80 to 85%, and then it keeps moving up. Abhishek, correct. Apart from that, capex plans, of course, the maintenance capex plan is something which the company does. So have you purposefully, kept the capex plans on the lower side? What's the entire rationale behind it? Because of that, your balance sheet is also decent and your return ratios also improve. So just wanted to understand your thought process.
Yeah, so we put in about 550 to 600 crore rupees in the last 36 months in capacity building. And therefore, our capacity utilization with the sluggish demand was low. We have more than enough capacity, considering that I'm using only 79% of the capacity. I have reasonable headroom to, use more capacity. Also, I think in the Morbi sector, there's enough and more capacity available for me to outsource from. So there's no immediate need of capacity expansion. However, we are doing some balancing equipment and about a 20 to 30, in fact, a little more, 30 to 35 crore rupees spend on balancing equipment to make some of our units even more value added. That process has started now, and it will start yielding benefits from Q3 onwards. So we are doing a lot to make ourselves more and more value added in most of our plants. So that's happening as we speak.
Okay, so value-added products benefit starts coming in from the third quarter. That's a very important statement. Okay.
No. The value-added product benefits are already there. We are trying to make more of our plants value-added. So it's not that we don't make value-added right now.
Right.
It's just that we are equipping some other plants which had headroom for become more value-added. That's what I'm saying.
Right. So value added in manufacturing, and that benefit comes from the third quarter. Interesting. But let's give me a perspective, Abhishek. Whenever there is a stress in the industry, and which is definitely there, for larger players like yours, generally what happens, you mentioned 10 to 15% of Mobi players might not exist going ahead. So when that happens, there's a consolidation at place, and when there's a consolidation, there's a market share gain for larger players like you. So any numbers to it, or how do you see this?
Too early, because it's still very volatile, the situation. I think this is yet to be seen as to how long this whole war would last, and how long these propane and LPG and gas prices will hold at these levels. Obviously, there is very much a lot of more stress at these levels, because every time at a larger base we increase prices by, let's say, given just an example, 15% price increases, that would tantamount to about a 30 to 35% price increase at a low base for the smaller Morbi players. So this obviously puts a lot of pressure on their margins, a lot of pressure on the cushions which they had built in. So that goes away. So I do believe that there would be some amount of consolidation happening if this had to remain for a very long time.
Right, Abhishek, it's wonderful to talk with you. You've given us a good clarity on the industry and the company as well, and yes, a good set of numbers also. It's always a pleasure to talk with you, Abhishek. So that's the management of Somani Ceramics, and a very surprise positive earnings coming in. But yes, there is a cautious tone because of the changing geopolitical tensions, and there's definitely a big change in the cluster of the tile segment in Morbi in Gujarat. For so interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Welcome, you're watching Your Money Matters here at NDTV Profit. I'm Mahima Vajrajani, and today we're going to talk about two things. First one, in fact, three things, Firstly, we're going to touch upon motor insurance or two-wheeler, four-wheeler insurance as we call it, as to what one should keep in mind before going for these insurance, how important are these and what are the aspects that one needs to keep in mind. The second thing that we're going to talk about is something that's been trending a lot on Google Trends. That is, everybody is going ahead and searching for Indian rupee versus the dollar, because we've seen Indian rupee depreciating to new levels of lows every day, and people want to know as to what's happening there. So we're going to talk about that as well. And lastly, we are going to talk about how, considering the crude prices are rising today, this second day in a row we have seen hike in terms of petrol and diesel prices. So how should you plan your transportation? So rent versus commute, how are you going to do that? That's everything that we're going to talk about in this show of Your Money Matters. Now, to kickstart things, and to talk about motor insurance, we're joined by Venkatesh Naidu, who's the CEO of Bajaj Capital Insurance Broking, joining us now. Venkatesh, thank you so much, first of all, for taking out the time. My first question is very basic to you. If somebody's going ahead and getting an insurance for their vehicles, what are the non-negotiable things that they should definitely look out for?
Wow, that's a difficult question for the beginning, Mahima. But thank you for bringing me up on the show. Buying a motor insurance, as you know, is a very, very simple yet complex topic, right? Today, the entire temptation is, do you choose the cheapest insurance, or do you choose an insurance that is valuable for your situation, for your motor, right? So something that is absolutely non-negotiable, Mahima, is you choose your insurance based on your vehicle, your location, your need, okay, and your context, right? And that's something that's very, very important. What do I mean by that? Okay? So typically, if you look at motor insurance, you can buy something which is a very, very base cover. Okay, today, what is mandated by the government is that if it's any car, you have a OD cover or a TP cover. A TP cover is mandatory as governed by law. Okay. But what a TP cover offers you is that it protects others from you. Means if you go out and have an accident and if you affected somebody, it protects that person from you. Okay, what an OD does for you, an own damage cover, is that it protects your asset, your car, right? So something that is absolutely non-negotiable is OD plus TP, because even today out of 60% cars that are covered in the country, about 40% in absolute terms are the only ones which has OD and TP cover. 20% of the cars have only TP cover and 40% has no cover at all. So an OD plus TP is an absolute non-negotiable to begin with, Mahima.
Okay. So when we talk about third-party insurance, right? These days, when we take a look at third-party versus a comprehensive insurance, comprehensive policies are kind of becoming more popular despite of their high premiums, right? So what exactly does third-party cover that or comprehensive policies cover that third-party doesn't, or vice versa? How does one compare the two?
So comprehensive, like I told you, covers everything. It covers everything from the damage to your car, okay, to if you cause an accident, the liability, the cover, the money that you need to pay to the person who you caused the accident. Comprehensive covers everything. If you take a third party only, it only covers the person you caused an accident to. So in case your entire car gets destroyed completely, that is not covered under the third party. Okay? So that is called the own damage cover, and OD plus a TP is a comprehensive cover, where it covers your car, your asset, and the person where you caused an accident, if at all.
Got it. Okay. So the other aspect is with regards to zero depreciation. Do you think it's worth having zero depreciation in your policy, and how does it help?
So again, a very, very commonly, ignored proposition. Okay, most people today, like I said, are very, very price sensitive. They look at the lowest price insurance versus insurance that offers them value. Okay, and what's with all the online applications that are available, people make quick decisions, ill-informed, right? A zero dep helps you where typically if there's a wear and tear in your car, you buy a new car and it's say 2 years old. After 2 years, all your parts go through a wear and tear. If you do not have a zero dep cover, that depreciated value is what is refunded by the insurer when you take it to a garage. You take your car to a garage and let's say your some parts of your car is damaged. If you do not have a zero dep cover, the level of depreciation that part has gone through, that is deducted by the insurer. Typically, it is about 20% every year. However, if you have a zero dep cover, then the actual value of that particular part is reimbursed by the insurer completely. So the difference between buying a zero dep or not buying a zero dep is about 8 to 10% of pricing. So today you may choose to save 8 to 10%, but tomorrow if something happens to your car, the value of that particular part or asset in the car will be far more expensive compared to the 10% that you will incur today as premium. So I would encourage everybody to go to have a zero dep as a minimum aspect in their car insurance policy.
Okay, all right. The other aspect is with regards to no claim bonus, right? First of all, of course, it's very important for everybody to drive safely in order to, have that no claim bonus. But how do you kind of put this into perspective and the ways to kind of protect no claim bonus as well?
So no claim bonus, very simply put, is that you don't claim means you get rewarded for the fact that you're not claimed. Okay. Right. Typically, every year you may get a discount of about 20% in your premium. It can even go up to 50% in certain insurers, right? If you have not gone ahead and claimed. Now, typically, what people do is that they go ahead and claim for every small accident, right? You may just go ahead and scratch your car, but you take it to a garage and the garage person will go ahead and, inform you that why don't you claim insurance. You may end up paying 4,000 rupees to address that scratch, but in the next year, you may end up losing an NCB of 10,000 rupees, 12,000 rupees. So my suggestion to everybody would be that if there are very small damages and if you can fund it from your own out-of-pocket expense, then go ahead and do that so you can claim on your no-claim bonus and ensure that you get that discount every year when you go ahead and renew your policy.
Okay. Okay, got it. And how do you look at cashless claim versus reimbursement claims? What is better?
Cashless all through. Okay, cashless is the absolute convenience. Go through all the network garages. You get the best seamless experience. The insurer will deal with the garage directly. Go ahead and make all the payments. you're not subject to the nuisance of making the payment, raising the reimbursement and claiming a bill. However, in case of emergency situations where you've gone ahead and had an accident and you have no way to reach your network garage, okay, which is improbable in these days. But even if there is a situation like that, you may always go in for a reimbursement claim. You'll have to go through a certain process. Okay, there is reasonable time for claim of, intimation of claim. You'll have to do that to the insurer. There's reasonable time for claiming the reimbursement. You'll have to do that. Follow the process and you will get your claim. But cashless is the best methodology that you can adapt to, especially in a situation where network garages now have grown across the country.
Okay. Venkatesh, what are the common reasons generally because of which your motor insurance gets rejected? If you can throw some light on that.
Well, exclusions is the biggest aspect, right? Like I said, you can either take a comprehensive insurance with all add-ons, or you can take the cheapest insurance with no add-ons, right? Today, customers are not fully aware of what they're buying because they don't receive the right guidance. Okay. Right. So, for example, let's take this example that somebody may go ahead, in the floods of Gurgaon. I belong to Gurgaon, so I'll talk about Gurgaon for a moment. And you go ahead and water enters your car, your engine seizes. Okay, and you go ahead and give your car out to the garage, and the garage will say, hey, you know what? The engine cover has not been covered in your policy. The obvious reaction of the customer is going to be, hey, is an engine part of the car? Isn't it covered? No, the engine cover is an inclusion. Okay, so if you go ahead and do not add that add-on, then exclusion is something that will happen, and you will not, get the biggest claim where engine is, a significant part of the cost of a car. Right? So the first thing that you need to be very careful about is exclusions. Look at exclusions. Don't look at the cheapest price. Look at the price married with exclusions, and be fully aware before buying the car insurance. These are the aspects that are going to be excluded from my claim. And if those are exclusions that you don't want to live without, then go ahead and ensure that you get those add-ons before buying your policy. Okay? That is a common mistake that everybody makes. So please look at your exclusions before buying your car insurance policy.
Got it. Venkatesh, a lot of times insurance for the same car differs, right? It depends on the person who is buying the insurance. So what are the factors that generally these insurance companies take into consideration that one should keep in mind before, going ahead and buying a vehicle insurance?
I'll give you the most common factor that happens, Mahima, is IDV, right? Insured declared value. Okay. So typically what happens is that for every car, every make and model, and based on the age of the car, insurers define for every car, model, make a particular IDV, insured declared value. Okay. Now that's a range. Okay. So what insurers or providers do is that they go ahead and provide the least price at the least IDV. So you may have a Honda Activa, a Honda car, which is 5 years old, and they might give you an IDV ranging between 8 lakhs to 7 lakhs. To go ahead and save on premiums, you may choose 7 lakhs. Okay, so if you choose 7 lakhs, lesser the IDV that you choose, lesser the premium. But the ill effect of it is that tomorrow if something were to happen to the car, say a total loss, then you will get the IDV that is chosen, okay, along with an RTI cover, okay, return to invoice cover. IDV that is chosen rather than the IDV that the car deserves. Okay, so IDV is the biggest factor. Apart from that, the underwriting factors of the insurer. Different insurers have different underwriting guidelines. They may, differ the pricing based on location, based on their experience, etc., based on the model, make, etc., etc., etc. Right? But IDV is the most common aspect against which the prices differ. Okay, so people need to be careful about choosing the right IDV rather than the least IDV.
Okay, got it. With regards to EV insurance and a regular car insurance, what differences should one keep in mind, first of all? Because, generally for EV, I think the higher cost will be on account of battery replacement, right? So what are the things that one should keep in mind while doing an insurance for EV specifically, and how does that differ from a regular one?
Well, Mahima, first of all, let me tell you, EV is an evolving space, right? Clients are learning, manufacturers are learning, insurers are learning, right? That's something that I would like to keep as a caveat before starting this. The biggest thing in an EV, it's obvious, is the battery on which the car runs, right? That's the most valuable part of a EV. Okay, something that is additional, and obvious for every EV is the battery replacement cover. Okay, that is something that is there as part of the EV part. So whenever you're buying an insurance, you need to be very careful that you're buying a battery replacement cover, whether it's an add-on or whether it's a built-in into the policy. If you ignore that, that is something that can be extremely, hazardous if ever you have an accident. That can really cost your pocket. Okay, so battery replacement is the biggest, replacement, apart from a few other aspects that are there as part of the EV.
Okay. The other aspect is that if you've taken your insurance once and if you modify it, then how do things work? Do you have to modify your insurance as well? Do you have to inform your insurance companies? How do things work?
If you've taken an insurance during the policy year, most insurers do not allow modification.
Okay.
However, at the stage of renewal, you can go ahead and add or deduct in terms of exclusions and inclusions. That is something that all or most insurers allow. Okay, so when you're taking the policy itself, when you're choosing your add-ons or removing the add-ons, that is something that automatically goes ahead and gets relayed to the insurer, right? So at the renewal stage is when this happens. During the policy years, most of the insurers do not allow any modification in the insurance policy.
Okay. And how does the subscription model work, Venkatesh? Do you think it's worth taking the subscription model, pay as you drive? That's how they call it, right? Pay per use, I think.
That's again an evolving concept. Something that is very, very obvious and popular. The States, for example, is not there in India yet. If you ask me, in India, it can be a very, very personal opinion. I think pay-as-you-go model, pay-per-use model is not a very popular thing. You should refrain from doing that if you can afford a full-blown car insurance.
Okay. Just one last question. When you're renewing your insurance, are there specific things that you need to keep in mind?
Yes. If you're renewing your insurance, wake up. Okay, based on this particular news, article, the thinking. Go ahead and evaluate your insurance, review your policy, and see if you have the necessary add-ons or not. There's no point crying over spilled milk. Look at your policy very keenly. Don't look at only price. Of course, look at price. Be price sensitive. Look at the most competitive offering. But please look at add-ons. Okay. Zero depth, mandatory. Return to invoice, mandatory. Engine cover, mandatory. Deductibles, preferred, mandatory according to me. But you may choose to opt for it or not opt for it. Right? These are aspects that you must add on to your car insurance immediately if you're not already added it. So please do that. Review your policy very strongly.
Fair. Venkatesh, thank you so much for taking out the time and, helping us understand this entire aspect of motor insurance. Though it's very wide, but we try to cover everything and you helped us cover that very wisely. Thank you so much, Venkatesh, for taking out the time.
Thank you, Mahima.
Okay, so we talked about motor insurance. Now, the other aspect that I was going to talk about is how rupee has been depreciating against dollar. And there are 5 reasons as to why this is happening. This was one of the topics that was trending on Google, and that's why we thought that we should address it. I think the first and foremost reason is that we're seeing sharp rise in crude oil prices. And because India imports almost 80% of its crude needs, when crude has gone up, over the $110 per barrel, India needs more dollars to kind of pay off that oil, and we're seeing that impact coming in and rupee weakening. The other part is that we've been talking about this. Foreign investors have been pulling money out of India. We've seen FIs continuously selling, and that also puts overall pressure on the overall flows in terms of where rupee dollar is concerned. The third one is the US dollar itself is strengthening, right? High US interest rates and safe haven demand are making dollar stronger worldwide, and that is why against the rupee, the dollar itself is strengthening. The fourth aspect is that the India's trade deficit is widening. We've seen India's imports are rising faster than exports, especially because of expensive energy imports. And this is one of the reasons as to why we are seeing increased pressure in terms of where our current account deficit goes, and therefore that puts pressure on the rupee. Lastly, geopolitical tensions are increasing. Global risk aversion is also happening. So the recent West Asia conflict is also adding on to the rupee weakening as well, because that's a loop of circle that we go into, right? Because of crude, because of the West Asia conflict, there's crude rising and rupee weakening. So all of these factors combined together is why we are seeing rupee weakening against the dollar. And because we were seeing this topic trending in the Google trends, we thought that we should address this so that people understand as to what's happening here exactly when it comes to Indian rupee and the dollar. So this is the overall view of what's happening and why the rupee has been falling to record lows in the past couple of days. But that's, of course, with regards to where the rupee dollar is concerned. But our next topic is also a very, very interesting one. All right, so we talked about the rupee dollar depreciation with regards to rupee depreciating against the dollar. But now we are going to talk about what our Prime Minister Narendra Modi has recently come out and said. He said that try to save fuel, right? Because like I just mentioned, right, crude is becoming expensive, and for India to kind of reserve their foreign reserves, it's important for us also to kind of contribute towards that and save fuel. So the message that we got from Prime Minister Narendra Modi was that try local commute, try pooling cars together, try work from home. So I thought that, we should come out with a topic that we can talk about, right? And the topic was that we can rather spend a little more on rent by staying closer to your work and spend less on traveling. That's something that we can explore, and I thought that why not have a conversation around this. And to talk about exactly this, we're joined by Vineet Iyer, who's the Principal Officer and MD at Prudina Wealth, who's joining us now. Vineet, thank you so much, first of all, for taking out the time. This is just a random topic that I thought that we should explore, but it is certainly an interesting one, right? Spending a little more on rent, maybe living closer to where you work, and spending less on commute. Do you think that makes sense?
I mean, it depends, Maya. First of all, thank you for having me here. This entire debate depends upon what's your preference, right?
Right.
If you're actually doing the shifting towards your office just because you want to save on fuel, the math doesn't add up. Just to give you a context, just recently there is a 3 rupees increase in the price of diesel and petrol. And if I do a basic math, if someone is traveling about 20 kilometers a day for 5 days a week, that's about 100 kilometers. Or for 40 kilometers, that's about 200 kilometers a week. So if you look at the fuel cost, it's increased by 3 rupees. So 200 kilometers will require approximately 20 liters of fuel. So per liter, it has gone up by 3 rupees. So about 60 rupees is the increase in the weekly petrol cost. And if you sum it up on a monthly basis, just 240 rupees. So just because your fuel cost monthly has gone up by about 240 rupees, it doesn't make sense to stay closer to the office and pay that higher rent. The reasons for staying close could be different, and I've got another context to it, which I'll speak.
Sure, go ahead. You can share that with us.
Okay, so the context would be the time that you are spending to commute is actually the time that you can save and do many things. For example, let's say a person earns about 1 lakh of rupees a month. So if you look at the daily earning, considering a 22 working days in a month, the average daily income comes to about 4,500. If you divide that further by 8 hours of working, it comes to about 550 rupees per hour. So if someone is spending about 2 hours daily on commute, he's actually spending about 1,100 rupees of his time worth. And if you extrapolate that over a 1 month period, that is a 22 working days period, it comes to about 25,000 rupees. Now, if someone is keen on saving on those 2 hours worth of time and utilizing that to maybe do some side gigs, spend some more time with the family, or do some self-learning, then maybe it's worth thinking about shifting closer to office and save on that 2 hours and save on that cost.
100%. That's a brilliant idea, Vineet, I must say. But then, okay, so then let's talk about this, okay? What do you think, okay, not from a perspective of just commuting to office itself, right? What do you think right now is kind of hurting your pockets more? Is it the rising rents in at least tier 1 and tier 2 cities is what we're seeing, that rents are through the roof? Or is it this, fuel price hikes that we've been seeing in the last couple of days? What is going to hurt you more going forward?
I think the rising rent would definitely hurt more, because if you look at the increase in the petrol prices, that's about 3 rupees, so about 3%. So it could be a temporary shock. But if you look at the trajectory of the fuel price increase, it has not actually increased in the last 4 years meaningfully. So if you look at an average inflation of about 4-5%, the the cost of petrol should have actually increased by a larger percentage, which has not happened. And that is also due to the fact that a good chunk of that increase in the crude oil prices the government is taking on itself by reducing the excise duty, by reducing the VAT. Of course, they still make a good amount of money, but that 3 rupees of price increase is not a very meaningful difference in someone's budget. Of course, that would definitely lead to other kinds of inflation because that becomes a reason for the other products to get pricier. But